Committee Room 21. Signed. 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 Committee Room 21. Sound. 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 Committee Room 21. Sound.
Okay, members, we're going to go live.
Okay, everyone ready? So we are going live. Okay. So,
I think we're good, Chair.
okay, members, it is the welcome to the 49th meeting of the Committee for Finance in the 22 to 27 mandate. Members, the committee meeting will be recorded and broadcast throughout Parliament buildings and online. Those in the public gallery are welcome to use mobile devices as long as they are in airplane mode or indeed on silent. Item 1 are apologies. We've no apologies, but we do have several members joining us remotely. Item 2 is a declaration of interest. Are there any members who have a declaration of interest to declare? No? Okay, well, obviously you can declare it as we go through the meeting. Item 3 is chairperson's business. The only item of chairperson's business is an invitation to a lunchtime reception on the FCA Strategy 25 to 30, which is taking place on the 12th of June, 12:30 to 2 p.m. So members, that's to note that invitation. Obviously we're hearing from the FCA in a few minutes. Okay, next agenda item is the draft forward work program. The draft minutes of the meeting held on the 21st of May. They're page 9. Members are content they're a true meeting, true representation of our proceedings. I'll sign them as always. Agenda item 5 is from Land and Matters Arising, and Land and Property Services, whom we are hearing from today. Clerk is drawing something to my
Chair,
attention.
I just need to draw attention to page 30 on the LPS corporate plan. There is a typo. Sharon Gallagher is Deputy Secretary, not Deputy Director. We're just flagging that up so we don't have to put the papers in the pack again next week. So members are content to note that was a title typo rather than anything more exciting. Okay, thank you, Chair.
Okay, no problem. We're obviously going to be having a briefing from Land and Property Services later this afternoon, so any questions can be reserved until then. Now, agenda item 6 is our briefing from the Financial Conduct Authority. which is obviously part of our banking and financial services inquiry. Page 48 of the pack, you have a clerk's cover note, and page 52 is a written submission from the FCA touching on the committee's inquiry. Members were also emailed a copy of the FCA Financial Lives Survey a few days ago. Obviously, people are agreed. Our friends in Hansard will report on this. Do we have Hansard or Hansard reporting this? We don't know.
We are running slightly early, Chair.
So we're running slightly early.
We haven't got Hansard.
They can retrospectively do it. They can retrospectively do it. So when Hansard are recording it, we can proceed, and they will retrospectively note everything that we've said. So welcome to the meeting, Ahmad Aladal, who is Director of Retail Banking from the FCA. We're really pleased to have the FCA joining us, who are obviously a UK-wide regulator. Financial services and banking are a reserved matter, but it's a really important locally focused inquiry, so we're very pleased to have Ahmad and team here with us. So we'd invite you to make some opening remarks, and then members do indicate if you wish to ask a question. Thanks very much for joining us.
Thank you very much, Chair. I'm going to keep my opening remarks relatively short to allow for questions and discussion. First of all, let me start by saying how delighted I am to join you today, and thank you for the invitation to allow us to engage you directly in this way. You have our submission, and certainly I'll do my best to answer questions today, and if there's anything which is of particular interest or particular detail, we can follow up subsequently and provide that detail. In our submission, we set out that the FCA, as you've just articulated, Chair, is the regulator for the whole of the UK. We supervise and regulate some 42,000 firms, of which 1,500 are based here in Northern Ireland. Our perimeter is determines what we can do, and our perimeter is set by UK government and by Parliament. We are a body funded by the firms we regulate, but it is incredibly important, as hopefully my representation shows, and the representation of my colleagues based here and elsewhere, that we represent the whole of the UK, and that is why we are so focused on the context in which Northern Ireland operates in, and the communities of Northern Ireland. We have set out our strategy for the next 5 years. It was recently published. We're coming back, I think, to Northern Ireland in June to launch it here. And our strategy sets out how we continue to build from the strong base that we have, to be a smarter regulator, to support growth, to help our consumers, and to fight financial crime. The work programme published in the last month in April sets out our how we're going to take that first year in that strategy in terms of our work priorities for this forthcoming year. In our submission, we set out our access to cash rules, and also particular interest to the communities in Northern Ireland, as well as communities in the rest of the UK. And I know it's been a matter of discussion here, and happy to
say, Ahmad, just to interrupt you, apologies for the noise happening outside. Someone in the Assembly Authorities thought it would be a smashing idea to schedule a whatever's happening to the outside of the building while committees were taking evidence. But so please bear with us. I'll let you continue with your opening statement.
Thank you very much. I thought it was a sign of protest against what I was saying.
Not quite. You're not at that stage yet.
Excellent. So, as I said, access to cash rules. The regime came in. Our regime came in September last year, following changes in legislation that allows us to set out standards in this space. We can talk about it further in the time we have today, and how it applies and how it's factored into Northern Ireland. And then. An area of particular importance as well is financial inclusion. Financial inclusion for our communities generally, but also in Northern Ireland. And again, I can go into some of our work in this space. I think I'm going to stop there. I'm going to, as I said, devote the time for the discussion.
Okay, thank you very much. So obviously part of our remit here, and members please do indicate should you ask a question. We have members, by the way, joining us remotely, and we may have one or two other members entering the room while we proceed. Our inquiry is about establishing information but also potentially making some recommendations, or at least observations where we can't agree on recommendations. Some of those may be to devolved ministers, and some of them may be to UK ministers, perhaps even regulators or the financial services industry writ large. So I suppose my first question is quite a broad one. In retail banking terms, what are the key, from the FCA's perspective, the key differences that strike you between the Northern Ireland market and other parts of the UK?
Thank you. I would set up, actually there is no single uniform pattern in the UK. There is no single homogeneous characteristic of the UK. Each community has different characteristics, and it's important therefore when we come to regulate and supervise and provide our role here, that we recognise those differences and apply those differences accordingly. Northern Ireland has a large credit union present here, some 138 credit unions. You have a largely rural communities. You have a large micro business, accounting for almost, I think, 90% of businesses here. In the context, I said that there are 42,000 regulated firms in the subject to our regime. Of those 42,000, about 1,500 are based here. You have the presence, as Director of Retail Banking here, I'm very familiar with the fact that you have the presence of some large key players, three of which are largely based here only in Northern Ireland, and then one which is part of a wider group, but certainly has large presence here in Northern Ireland. And then you have other members, other banks and building societies based here. All those factors provide a view in terms of how we supervise and how we regulate. In retail banking, the teams that report into me, following as part of the strategy, as I noted in this introduction, we restructured retail banking slightly to cater for some of those priorities. One of the changes we implemented was to have a dedicated team focused on Northern Ireland, who focus on those large banks that are based here, and that allows us therefore to make sure that we are able to recognise the particular differences, the context in which Northern Ireland banks operate in.
Okay, one quick thing, Matt, if you're able to speak a little bit louder, purely because we have, not just because of the external noise, but just so that the microphones pick you up and we have members joining us remotely. So you mentioned the greater levels of rurality, which is obviously true, and that's something that comes back time and again to us as representatives in the context of this inquiry. One of the things that we are most often deal with in terms of representations from our constituents is a greater reliance on cash, but also a greater, frankly, greater financial insecurity. What work is the FCA doing to address those issues, and are there any specific observations you would make about the Northern Ireland context, both the greater rurality, the greater reliance on cash, and also the slightly higher levels of financial insecurity and precarity, which obviously come out in your I think your survey data as well.
Thank you very much. Hopefully this is loud enough?
Yes, that's loud enough. Yes, absolutely.
Thank you very much. So in terms of cash, as I said in the intro, the regime came in last year, September last year, following changes in legislation to allow us.
Yes.
That regime recognises that actually it's not a single size fits all. It purposely drafted to say that when banks are considering closing a cash provision service, a branch or an ATM, or when communities make a request, there is an undertaking to look at the community needs and the particular community needs in those areas, and make sure that they are responsive to them. Whether that means that they introduce a cash service provider like an ATM or a hub, or look to work with the post office. Here they are looking at parameters around distance, around costs to travel, and I think that's a particular factor when you're looking at rural areas where it's not just about the as the crow flies. It's actually about the local transportation and the costs of travel. And then, sorry, your second part of the question?
Well, just any specific observations or specific actions that are being taken by the FCA, and obviously there's a broader piece of work going on with Link and Cash Access UK, but I'm interested in the work the FCA is doing and anything specific in Northern Ireland.
So with respect to Link, just to clarify, Link is part of the parties who's part of the regime. They are, whenever a community sets out a need for, they believe there's a need that's underserved, and whether it's a rural community or a urban community, Link is helping the banks undertake the assessment, determining what the needs are, and then through Cash Access UK, potentially fulfilling that through a hub or otherwise. You asked, I do remember now, you asked the question around financial inclusion as well, and the considerations. We have worked, and my colleagues, I think some of you have met my colleagues in the last few months in the prior year, around the work we were doing with respect to financial inclusion. That includes, for example, we have worked with the credit unions here with respect to workplace savings and trying to help build financial resilience in individuals who find it hard to save and find it hard to maintain and build that resilience. We are on that work. We are hoping to publish something later this summer, which sets out how employers can work with organisations like credit unions based here, but also banks and building societies to provide some solutions to allow for individuals who are financially vulnerable to build greater resilience. That's an example of how we are engaging in Northern Ireland and providing for the solutions here.
Okay. I just want to move on to the specific context which you mentioned there. One way in which Northern Ireland does differ from the rest of the UK is that we had these kind of, our banking sector was really anchored by 4 dominant players, 3 of whom were cross-border players. So they were almost all Ireland banks, but with sometimes with distinct brands here, but they were effectively very local, and they had actually quite either very significantly devolved decision making and P&L and responsibilities here. One of the things that has emerged in our evidence is that their share of both personal and retail banking in general, so personal and small business banking, has shrunk consistently. I'm interested as to whether that specific context is a concern to the FCA around competition. I know you share responsibility for competition with the CMA, but I'm interested if there's a concern there, or is that something we should be relaxed about, as it were, the traditional big 4 here shrinking as a proportion of the banking market?
Thank you, Chair. It has not cropped as a concern. So it has not been raised as a concern.
Okay.
From our perspective, that we are seeing competition with respect to these 3 providers, as you say, who are, for my context, based in Northern Ireland, as well as the 4th as part of a wider UK group. And actually, I think that's a factor into competition between the credit unions, between other banks and other providers in this space. I would take a step back and look at the provision of accounts generally. Within the FCA, you reference our recent publication on financial lives. One of the key characteristics in there is about access. Do individuals have access to bank accounts? Do they feel included in financial services? And one of the key metrics in that space for us is those who want a bank account, can they get one? And I'd like to note that as the Financial Lives survey sets out, we have seen that metric positively improve, both in Northern Ireland but also the rest of the UK in equal measure. it's gone up by a couple of percentage points. And I think, if I remember correctly, less than 1% in Northern Ireland do not have a bank account. And that is, I think, a healthy indication of competition.
Is that, what is that relative to the UK writ large? Is that sort of...
It's very similar.
It's very similar, okay.
Very similar.
Okay. And on the financial resilience point, you published obviously in the last week the Financial Lives document which you referenced and said, I'm just trying to work out the percentages here, but perhaps you can, I would actually work out the Northern Ireland percentages for me. It said 0.2 million people had no cash savings at all. Now, by a very rough reckoner, we have just under 2 million people in Northern Ireland, so that's getting on for 10% without cash savings. What is there an equivalent number for the UK writ large?
There will be. I don't have it in front of me.
I'm not trying to put you on the spot. I'm just trying to the comparison.
My memory fails me right now. There is an equivalent number.
Yeah.
It's a number that is why we have prioritised consumer resilience in our strategy. And that's why, actually, in the earlier questions, I reference the work we're doing in workplace savings. Here we have no, this problem set, Chair, is not a problem that can only be solved by the FCA.
Yeah.
You can't. But however, we recognise that we have a role here to convene, a role to make sure that we are doing our part of the wider government, non-government, charity work, etc., to make sure that the solutions are there. Hence the reference to workplace savings, but other work in making sure that basic access to financial services, basic awareness of what's available and products is there. That's a bit of our work.
Okay, bring in other members in a second. I just wanted to ask, do you have much contact with, so local departments here don't have direct policy responsibility for financial services? That's reserved, but it's not accepted, it's reserved. This is an important point, and maybe important in the future. So it's obviously critically important for a number of areas of the functioning of the retail banking market here. So the economy department here and the finance department, this is the finance committee, they both have a very direct interest in its functioning. Do you have much contact with them, and do you view them as stakeholders, or is it very much through the kind of UK government treasury, who are obviously your main sponsor department?
We maintain a permanent presence here in Northern Ireland, and we do so to make sure that we can conduct our job well. We understand the context in which Northern Ireland exists in Northern Ireland, and that involves us engaging various stakeholders. And you will know, I think, that my colleagues have attended and met your colleagues over the last few months, and will do so again in the coming months. And that's part of making sure we understand the local needs.
Okay, I'm just going to bring in other colleagues now to ask other questions. So first of all, Diane Forsyth, Deputy Chair.
Thank you, Chair, and thanks very much for joining us today. We've taken some evidence from groups like charities involved in the community sector who've expressed concerns about challenges that they faced accessing a lot of their banking resource, banks getting closed down, bank accounts getting frozen. And I just wonder if you could give us some detail on the work of the FCA in this space.
Absolutely. Forgive me, is it Miss Forsyth, or do I say?
Yeah.
Yeah, thank you, Miss Forsyth. It's a problem set we understand quite well. We did a number of reviews in this space, the last couple in 2023 and again in 2024. And those reviews have identified that access by charities and other organisations to bank accounts and maintaining those bank accounts, it can be problematic. And part of the story here is around banks de-risking and making commercial decisions, as well as a perceived view on maintaining controls around financial crime. And the work we published was in 2023 was looking at the situation, which particular groups are particularly challenged, And we also did an international study. We compared the UK market and the problem sets that exist in the UK with other comparable markets around the world. And we found that actually similar issues exist. So we're not unique here in the UK and certainly not in Northern Ireland in that respect. We continued that work. As I said, we went further in 2024, looked at some of the specifics and some of the numbers around this, and charities was clearly a problem set there. What we have done with that work is we cannot compel banks and building societies to open bank accounts for charities. We can't. That's a commercial decisions for them to make. But we've used our convening power to bring them together, to bring the charities and those who represent charities, to help them understand what banks are looking for in terms of some of the control environments, what the questions they're asking, and also trying to make sure that the banks and their representatives in UK finance understand how charities work and some of the particulars around trustees and the number of trustees, etc. That convening has meant a number of roundtables, and some of that engagement continues. We have made it very clear to the banks that we cannot compel them to maintain bank accounts or to open bank accounts. If they choose to close an account, they do so very carefully. They consider the impacts on the customer, the charity, and they try to make sure that the charity understands the reasons behind those closures. When banks are going through large programs around reviews associated with their customer base, we are actively engaging them to make sure they're doing it properly and not being, they're being careful in how they consider their clients' needs.
And whenever you're talking about the international analysis, have you done analysis of the different regions within the United Kingdom? And is Northern Ireland similar in terms of this to everywhere else, or is it any more?
The analysis
challenging?
the analysis did not separate the rest of the UK. Did not identify this. However, the problem set is across the UK, including Northern Ireland. So the ability to gain a bank account and retain a bank account by charities is something that exists. It's not unique.
Yeah, and I think as well, for our inquiry, we're identifying a number of quite specific issues to Northern Ireland. I think that where we have specific issues with access to banking and some financial services, that would be aligned with the fact that charities here face additional pressures as well, and it'll be good to see what sort of recommendations we can take going forward out of it. Thank you.
No problem. Gemma Dolan is next. Gemma is joining us from remotely. So Gemma, can you hear us?
Yeah, thank you, Chair, and thank you for that presentation. I represent Fermanagh and South Tyrone, and Fermanagh is obviously a border county. So I'm just wondering, in terms of access to cash, I have several constituents who work in the south and obviously live in the north, and they face challenges with getting a bank account due to not being a resident in the south. Is this something that you're aware of, or do you know of any work being done to maybe rectify this, or have you any cross-border work with relevant authorities or banks in the south of Ireland?
With respect to the Republic of Ireland, we are working with this. We have engagement with CBI, Central Bank of Ireland, if that's what you're referencing. And in that work, we compare notes on various topics. Ms. Dolan, I don't think we have discussed that particular set of problems, i.e., where individuals based in Northern Ireland trying to open an account in the Republic of Ireland. We'll take that away and consider. But ultimately, it sits outside our ability to regulate. That is for the Central Bank of Ireland. What I do know is that, as I said earlier, access to bank accounts is a problem set that's not unique in the UK, and hence why we did this study. And I think you will find that the Republic of Ireland has similar similar issues. But I'll take that away. Thank you.
Okay, that's great. Thank you very much. Thanks, Chair.
Okay, Judy Hargey.
Yeah, no, thanks very much for your presentation and just the documents that you'd sent in advance. And I suppose a big area that we're looking at is around consumer protection. And I suppose just from your end of things around how you assess or what you would see as emerging trends, and I suppose your ability to respond to those. So is there anything that you are seeing looking forward, and I suppose how do you do that?
So consumer trends generally?
Well, just financial trends in terms of like cryptocurrency, AI, automation, or looking at all of those things. Are there, in light of consumer protection, are there trends that you monitor in terms of trying to build in safeguards in advance of that and to mitigate the risks? So I'd be keen just to understand that a bit more, and if there are particular trends that you are identifying.
A very good question. We, in part, why we do the financial life survey every couple of years is to allow us to focus in on I think some of the real challenges that exist in our communities and impacting our consumers out there. We talked a few moments earlier about consumer resilience, financial resilience, improving to some extent, but actually still a concern, and that remains an area of focus. And that it feeds into our work in different guises. We know that consumers are not engaging with advice on how to get the best outcomes, the best products, and that's the work we're doing. That's why the work we're doing in advice and targeted support in that space. Publications later this summer in that space. We know consumers are still falling significant numbers, and none of us are immune to this, to fraud and to scams. And we've done a lot of work in this space, and we'll continue to do a lot of work in this space, and some of it is direct and working with institutions like banks, but some of it is indirect and working with law enforcement and other parties to raise awareness, to work with other parties who have a role in this space, as well as with government departments and the role of technology. Then, as you said, there is a trend there around, you mentioned crypto, there is a trend around consumers who have some money more actively putting that money either in a bank account or in crypto or on crypto, and actually arguably they need a diversified portfolio. They need to consider other investment opportunities, and the work we're doing in this space to raise awareness around the risks of crypto and the need for consumers to consider investing for the long term, for long-term resilience. These are general trends.
And I suppose, I think it's good that obviously as part of your restructure and you're having a focus on the north, and I think it would be good going forward to see what that kind of ecosystem of support looks like here, and if there's any gaps in it then, between yourselves and the Consumer Council and the banks and stuff themselves, just around is there more that can be done to increase that protection, awareness, education, and are there gaps? And I suppose that's my other question around, again, the advancement of online technology. Are the protections really keeping pace with, the advancement? So obviously innovation can be good, but it could also have a negative side as well. And have you identified any gaps? Because obviously these are reserved matters in terms of how your oversight, but do you feel that there's legislative gaps that need to be closed in terms of the advancement of that technology? And if so, in what areas would that be? And I suppose my last area is around how we democratise financial power. So I have a big issue with that, and obviously I know one of the criticisms of your organisation, I suppose, is enforcement around financial scandals, particularly from big banks, in the treatment of consumers, or where governments have bailed them out. at a cost to the public taxpayer. So it's just around that democratisation. You've mentioned that we do have credit unions and stuff here. So it's just in that context, are you having discussions, are you doing research around how we can change the financial landscape and democratise it more, that people do have greater oversight, they have greater accountability. There's greater knowledge and education of the financial systems for those at the grassroots, because obviously, as you say, our landscape here is majority micro business. So how do they have a greater oversight? And the concern would be that the big players often knock the smaller players out and don't get a look in. So I'm keen to look at that around what your education programme could look like in terms of that democratisation. Are you looking at community cooperatives and financing around that and making it easier, not as burdensome for those types of financial lending, and particularly in the context of the credit union landscape here as well? The economy minister's obviously looking at making changes in terms of the regulations. So have you any experience or, I suppose, practical examples or areas of research, or are you even looking at this area at all in terms of the landscape?
Thank you very much. A few clarifications and then from my side, and then I'll try to go into a bit of detail. The FCA has no objective around education. So we work with organisations like MAPS who have an education mandate. Our focus is making sure that they have the right insights to fulfil that mandate, as well as our focus on raising awareness. So we talked about trends earlier. We have awareness raising programs like Invest Smart, Scam Smart. This is all about helping communities and individuals understand the risks and the associated with some of what's going out there in technology, etc., as you articulated. In terms of you asked for legislative views, etc., I cannot speak to that. I think that's for our perimeter is set by UK government and UK Parliament, and we can't speak to. And that's
you can't identify gaps though
what we do every
protections.
year. What we do every year is we publish a perimeter report, and that perimeter report effectively identifies where there are jagged edges to our perimeter, and where there is potential areas of need to focus on, and that's the perimeter report. Beyond that, to a wider point, as I mentioned earlier, the priorities for our strategy just launched is in four broad areas. It is about helping consumers, it is around fighting financial crime, it is around growth, and it is about being a smarter regulator. That is, I think, should indicate to you that across the base we are looking at how, using a word, the trends are apparent in Northern Ireland and how we are helping address those particular areas of focus. Does that help answer your question?
I suppose just looking at that democratisation, so have you identified areas, or are you even looking at that around how financial services are more accountable? Because obviously in the worst case scenarios, when you look at where things go wrong, and that would be a concern or a criticism, is there enough oversight? Is there enough accountability? And I suppose it goes back to, but do people have enough ownership of these assets, which are huge? And obviously, they are a key plank in terms of growth, but also, when they do go wrong, it's the public purse often pick up the pieces and have to provide like a social security for financial services. So I'm just wondering, is there, in terms of in line of consumer protection, but also in terms of that ownership of financial power, is there more that you believe could be, rather than just saying the system as it is will regulate it?
No,
are there changes that could happen that kind of brings more accountability to that system?
Thank you. So we maintain, I want to assure this committee, we maintain a very active supervisory function as well as a very active enforcement function. And by that, supervisory functions, which report into me for the retail banking and building societies, we are focusing on ensuring that these firms are fulfilling the obligations that they're subject to, both in terms of establishing in law, but also establishing our regulations around consumer protection. And when things are have gone, when firms are acting particularly bad, significantly, that is where we take enforcement actions, and we have not shied away from enforcement action. And if this committee wants, we can set out the enforcement actions we have undertaken in the last few years, just to demonstrate the actions we've taken.
I suppose just my last bit on that, because I mean, I would even find a lot more people are using the online banks as well. So is that a new sphere of area in terms of, is it a different approach to the regulation then, or how are you managing that as you're moving forward?
That's a really good question. So we set out quite clearly that we're channel neutral. What does that mean? Well, we recognise in the world that we live in, consumers may want to engage their bank through their branch, they may want to engage them through telephones, they may want to engage them through online or through their apps on their phones, etc. Our focus and the reason we set out the consumer duty a couple of years ago as a new obligation on these firms is the consumer duty effectively sets out an obligation on these firms to focus on outcome. Outcome that makes sure that consumers are protected and that they are preventing foreseeable harm and achieving an outcome that the consumer wants. Therefore, that allows us to talk to these institutions, to these banks, building societies, credit unions, in a way that says, irrespective of the channel, whether it's an app, whether it's a branch, or whether it's a telephone, irrespective of that channel, are you achieving that right outcome? We have done work in this space in the last year, for example, in cash savings, where we looked at whether these institutions were providing, fair value in terms of the interest rates they provide for cash savings, that they're passing that interest rates in savings accounts, and then produced not only direct engagement with the relevant institutions, that's where we've had feedback for those institutions, but we've also set out good lessons, and poor lessons that the wider market can learn from.
Thank you.
Thank you. So, members obviously do indicate if you're to come in before we release our friends from the FCA. But one of the areas of work is obviously support of the FCA in general, endeavouring to support growth, and that would obviously include small business lending. That's not an exclusive responsibility of the FCA. Obviously, the Bank of England and the Treasury more generally have that responsibility too. The statistics show that Northern Ireland has a slightly lower level of, I suppose, what you might call risk-taking, or a slightly less risk appetite, or a slightly reduced appetite for accessing lending. One of the things we're trying to establish, if we can, is whether there is a barrier to finance that is making that problem worse, or whether it's because we have, for example, a larger number of established, generationally passed down family firms that people simply feel we don't really necessarily want to go out and access more debt to grow our firm. I suppose, first of all, in terms of risk appetite, and I'm asking you to comment on the kind of microeconomics of where small business are now. You can if you want, but what are your observations at the UK-wide level about how well the financial services, particularly as they evolve away from the traditional high street model, are supporting small and micro businesses who, for example, might want to access finance to buy a bigger something very as straightforward as buy a bigger shop, a bigger warehouse, up to growing significantly in staffing or beginning to export. My question is really, as financial services evolve from the traditional high street banking model with relationships managed by local managers towards something that is both more electronically innovative, which is useful in one way, but also reduces the level of personal connection, with burdens in KYC and all of that. What are the observations at the UK-wide level about issues that is creating for small and micro businesses that might want to access finance, or might not know they want to access finance, but want to talk to a bank manager and grow? I'm interested in your observations about what the challenges are there.
Your last point, I think, I'll come back to about awareness there.
Yeah.
I think in some ways that's a challenge. Let me first of all explain the FCA's remit.
Yes.
The FCA only regulates or supervises what we call regulated lending in this space. And regulated lending is a very, very small subset of overall business lending. Lending less than £25,000, lending to non-limited companies, lending to small partnerships, etc. So it won't cover the wider perspective you just set out. There has been a change in this market in the last decade, both in terms of you articulated the appetite of the main lenders. There are now specialist lenders who focus on more so specialist lenders who focus on micro and small businesses as well as medium-sized businesses. And as I said, majority of that sits outside that regime. In addition to that,
So the majority of those new entrants to the market are outside the FCA.
No.
The majority of their activity is outside.
The activities outside.
Yeah.
Not the firms themselves.
They are regulated, but that specific activity you're talking about below the micro lending, to sole traders and
So if it's less than £25,000, it comes under purview. We did some work. I think it was last year. In this space, looking at within our remit. I think the report was published in December, and if you're interested, we can email it. That looks at lending and perceived. So it looks at regulated lending to businesses and the perceived challenges around personal guarantees. And in that work, we showed that there is no material issue there. For example,
that's at a UK-wide level, obviously. Yeah.
We did it UK-wide. The perception is that the personal guarantees are a hindrance to some sort of lending to businesses, etc. As I said, to the regulated lending, it just wasn't really apparent as an activity. Broader on this topic, and going to your last point, really, if you speak to those who are actively engaged in this subject matter, they will talk to you about awareness by businesses, small and medium businesses, of the lending that's available and the types of lending and the organisations involved. They go to a high street bank and they don't get the loan they want, in part because the high street bank may not see what they would expect. But actually, there are other providers out there, and actually, some of the problem set here is how do you raise awareness amongst these
Indeed,
businesses?
and I think that may be a specific challenge in Northern Ireland. Or certainly, we have heard in some of our evidence that there is possibly both a challenge with people feeling aware that they can access finance and financial service support, perhaps that they should, or that they should think about it. So, any additional information you have, I think the committee would welcome hearing about it. Because we think we have heard, I think we've now multiple anecdotal sources and witnesses who have said to us that there is a particular challenge there. And I think one of the features, which is specific to here, it's a feature elsewhere, but it's particular to here, is probably a higher proportion of family-owned, multi-generational businesses who may feel they don't want or don't particularly need to access finance in order to grow, and that may be the right decision for them. I just wanted to go back to a point before we conclude, to go back to the point that was raised by Gemma Dolan about cross-border banking and another particular context here, which is the post-Brexit context and the fact that there were always slight disruptions. Obviously, there's two different regulatory regimes and two different currencies. But that has obviously, those things have become harder post-Brexit. Now, I know, to restate the FCA, the FCA is not responsible for things like passporting or negotiating those market access or things like that. But clearly there are areas, you mentioned earlier on that you work with the Central Bank of Ireland. Is it an area that you think that the FCA will be willing to look a bit further at, the potential where there might be FCA scrutiny or investigation of potential issues, because it's something we hear time and again for people who, for example, in Gemma's constituency, live in County Fermanagh and work in County Cavan, and these, you could be talking about a few miles over there where your job is, but your house is here. So that creates all sorts of challenges where you probably have to have two banks and you might have two banks with the same different bank, two accounts with the same different bank, a euro account and a sterling account. Previously it was easier to have both of those accounts and perhaps go into a branch and talk to the same cashier about it. Now you might not even have the branch, and it's a bit more challenging to access both of those services from the same bank. I just wonder if the FCA is looking at that, and there might be more work you could do in that area. And I'm not trying to commit you to a whole strand of work, but it's a particular concern, and not just, by the way, for individuals that are on the border, but for lots of businesses who access those services.
So I mean,
and I'm aware, by the way, there will be lots of this is the remit of the Bank of England rather than the FCA.
So let me clarify a few things in terms of current status, and then come back to your question, I guess. Current status, we cannot, for example, tell an institution based overseas what, you know this, but I mean, just for the benefit, overseas, and whether it can and should not open an account for an individual based in the UK. It's not our place. We can't mandate that. And likewise, if someone is residing outside the UK, wanting to open a bank account with a UK institutions, the UK institutions will find it difficult to meet that obligation unless they are regulated and supervised in that territory. In this case, we're talking about the European Union, and that's the reality today. To your point, the UK government, as you know, is engaging European counterparts, and we're active in this space and supporting that work to the extent it relates to financial services. Beyond that, Chair, I can't really, I can't expand.
Fair enough, and I appreciate that the FCA has the Financial Services Act does not enable you to give orders, as you would put it, to entities that are providing financial services in different jurisdictions. I get that, and it would be improper for you to say that. Having said that, there's the financial services industry in Northern Ireland, for many people who live in Northern Ireland, is inherently cross-border. So I suppose the point we are making, and I think we'll reflect on in our final report, is that there is a very particular set of needs that affect customers, basically, sometimes in their everyday lives and often businesses. So it's one that I think we would ask the regulators to be mindful of, to the extent that it affects. And it's also important to say that the banks we are talking about, and they're not secret organisations, Ulster Bank, well, it's not Ulster Bank now because they've divested from the south, Bank of Ireland and AIB are both regulated by the Financial Conduct Authority, and these are the kinds of banks we're talking about because they're regulated by the Central Bank of Ireland too. Mm-hmm. They were cross-border institutions, but it's harder post-Brexit to be cross-border institutions and provide services seamlessly. There are other examples, which are not the purview of the FCA, but for example, we hear anecdotally about certain types of client work that would have been done in Belfast for customers in Dublin. Now that's a kind of staffing question for those banks, but I think there is a customer services issue that if it would be helpful, I think if you're minded, I don't know if you're able to just give us a kind of update on some of what you talked about earlier in terms of work with the CBI and any reflections the FCA might have in terms of where they might work, accepting and totally acknowledging that there is a clear territorial limit. But we're not talking here about banks in the Cayman Islands or North America. We're talking about other UK regulated banks, i.e. AIB and Bank of Ireland, who are also regulated by yourselves.
So as I said right in the introduction, we established a team that in retail banking, specifically looking at the banks based in Northern Ireland, to look at the particular circumstances that are unique here. We'll take that away. I mean, Chair, I'm not promising anything here. We'll take it away and see what we can do in terms of our engagement.
It's for politicians to make promises rather than regulators obviously enforce them. But I think it would be helpful if you could give us an update on any specific, even if they're just observations, let alone takeaway actions, because I think that is a challenge that we have been, not just border representatives, but more generally at the post-Brexit context, and it isn't covered really in any meaningful sense in terms of our post the withdrawal agreement. Okay, no further members have indicated they wish to ask questions. we've covered a useful bit of ground there. Can I thank you, Ahmad, for coming and giving us evidence into the FCA. It would be helpful to do a few things, obviously, we're going to follow up on, but we really appreciate you coming and giving us evidence.
Thank you.
Any other written material you think would be beneficial to the inquiry, we will obviously correspond with you when we publish our final report, and we look forward to that in the future. Thank you.
Thank you very much.
Thanks.
Thank you, everyone.
Thanks, everyone. Okay. Thank you. Okay, folks. So I think there are a couple of bits where we agreed some follow-up information, one of which is in the cross-border context.
We have follow-up on that, the perimeter report, and the report on lending that they published in December as well. So we'll follow up with the local representative on those issues, Chair.
Okay. So, members, at page 59 of the meeting pack, the ABI, the Association of British Insurers, has provided further information on a number of issues that were raised on the 7th of May at our hearing. One was practical operation of the flood refund, details of localised criteria to determine premiums, and that I think will be particularly useful, and it might be worth. I haven't gone through the localised criteria point yet, but it might be worth us sharing that with the Infrastructure Committee, certainly for a kick-off, and maybe even the Economy Committee, who the chair's with us here. But it's just that if that information is obviously something that crops up for our constituents and in other contexts. Okay. So, members, if we're agreed to note that response, add it to the committee's web pages, and as we've discussed, we will share the pertinent information. I think both on the flood insurance actually and the and on the localised criteria. As you should, Mr. Greenish, we'll share that with other committees. Page 64 of the meeting pack, Barclays has provided further information following the oral evidence session on 9th of April. So, members, is to note that response and add to the committee web pages and the evidence base for the inquiry. Page 66 of the meeting pack is Hansard transcript of the oral evidence session we had with the Finance Innovation Lab at last week's meeting. That will also be added to the committee's inquiry report. So, we now move to agenda item 7, which is the... apologies, Deputy Chair.
Yeah, thank you, Chair. Could I just ask, could we maybe just pause and have a wee check on the inquiry as to where we're at? Or, like, we've covered quite a lot of ground, and it's got very, very broad, and we're kind of getting, a lot of evidence every week, and I just was wondering...
The clerk will be able to give us an update on... So, we obviously have a public... exercise in the public are able to give us their views, and I would encourage again members who want to share that on social media or correspond with local businesses or whatever about that. We're obviously planning to launch a report on September the 23rd, so but the clerk can maybe give us...
So, Chair, we've this literally today completed the oral evidence that the committee had planned to take. We have a couple of pieces of written evidence that we have asked for by in the next couple of weeks, and we'll proceed then to bring to the committee a set of themed issues that we can then look for members' consideration on, and that will lead us then to compiling the report probably over the summer recess. We have the launch date plan. We have a long gallery booking for the 23rd of September, but we're now in a position where, as members have said, this has become quite expansive, but we are stopping the evidence taking so that members can kind of gather the information together, take their breath, and see the issues that they want to particularly highlight in the report. That's kind of what we're doing in the next few weeks.
I think we're draining the pan now and through the calendar. But we have covered, I think there's important stuff that was covered there, and I think we'll have a genuinely substantial bit of work to do or completed. Okay, members, if members are content, we are now going to move on to agenda item 7, which is the Next Estate Strategy. The first review of the Next Estate Strategy, which was published in 2022. So it's now being reviewed. We have an oral briefing from departmental officials. There's a note at page 73 from the clerk, a progress update paper from the Department of Finance at page 77, and at page 94 of the meeting pack is a copy of the next Office Estate Strategy. So welcome to the meeting, Sharon, Des and Niall. Sharon Smith, Deputy Secretary of CPD, Desi McDonald, Director of Properties Division at CPD, and Niall Hobbs, Deputy Director of Property Division at CPD. Sharon, please do make some opening remarks, and members, as always, indicate if you want to ask a question.
Thank you very much, Chair, for the opportunity to update the committee on the NICS Office Estate Strategy. You've already made the introductions here, so I'm not going to repeat those. Trust members have had an opportunity to read the progress report which we provided. However, I thought it would be useful just to give you a very brief overview of the first review of the strategy. By way of background, the draft NICS Office Estate Strategy was produced in June 2024 and published on the Department's website on the 25th of February 2025, and that was following extensive consultation with the DOF and NICS boards, all civil service departmental accommodation officers, central trade union side, and a copy was also provided to the committee in October 2024. So this is the first review of the strategy, and it outlines the progress against the targets that we set, or the KPIs that we set before March 2028, and these are baselined against the property and accommodation data for the year ending the 31st of March 2022. So at that stage, the NICS office estate consisted of 99 buildings. Now this included...
They charged from 99 buildings at the start of 2022 when the review period started. Okay.
And this included 33 jobs and benefits offices that are used exclusively by the Department for Communities. As we call them, JBOs. So the JBOs were out of scope of the NICS estate strategy, as these are very specific locations, and any ability to rationalise these are determined by DFC. So DOF is working closely with DFC.
Just to go back, the rationalisation specifically challenging for DFC because demand led, or you guys don't have control over how is that basically you can't legally say we're shutting that benefit office because we think it should be.
The Jobs and Benefits Office are very specifically located in terms of the demographics and the organisations and who need to use them. So it wouldn't be possible for DOF to say, look, we think we can rationalise 3 organisations into one building in that region, because the JBOs are very job specific and have very specific front desk and some back office functions. But we are working alongside DFC because they have their own rationalisation plan as well with the rollout of universal credits.
I just want to say that in one sense that's the most of the next office estate, that's probably they're the most frontline service driven. That doesn't include does it include the prisons estate? No. So it's basically that probably so people will think of, for example, hospitals are all owned by trust. They're not in the next office estate. So evidently, same with schools. But this is the benefit officers JBOs are basically the most frontline of the office estate. Okay, just want to clarify that.
And the office estate generally is the accommodation where civil service work, and it just so happens the JBOs have the front office as well. So that's the speciality there.
Okay, well, sorry.
Yeah.
I'm interrupting because it's a good sign when I interrupt because the information's interesting. Go ahead.
And Niall reminded me of the as they were DARE Direct, now DARE Direct offices as well, which are specifically located because of the services for farmers.
Okay, and just to say also, Sharon, for some reason, as I said earlier on, a very delightful person has decided to schedule work that involves forklifts and reversing noises and various other things. Please don't let that discourage you from your evidence. But obviously,
it wasn't us, may I say?
I know. It wasn't you. It wasn't us either. Apologies, but so it is slightly disrupting our evidence. But obviously, please, the emphasis on speaking as don't shout, but.
Okay, as loudly as possible.
Yes, indeed. Yeah, thank you.
So of the 99 buildings then, we have 66 offices which are in scope for the Northern Ireland Civil Service Office Estate.
Yep.
And just to give you an overview of where we are against the 6 KPIs that we set by 2028 against the property and accommodation data baseline for the year end on the 31st of March 2022. Out of the five out of the 6 KPIs were green. Yep. And I could go through those, Chair, if that's helpful, or it is in front of you, but I can go through those very quickly if that's helpful.
That would be helpful, I think, for the record, yeah. I've seen them in front of us here, yeah.
The 5 green ones are KPI 1, and we set a target of 28 buildings closed. That's 28 buildings out of the 66, and as of the 31st of March 2025, we have 16 buildings divested. So our initial target there was 40%, we're at 24%, so we believe...
It's 40% by 28?
Yes, yeah. And the third KPI, at least 20% reduction in rates bills, and that's against the 2022 rate bill. And of that, we have an 8.8%, which is £1.3 million reduced in the rate bill. Yep. KPI 4 was at least 40% reduction in rent costs, and as of the 31st of March 2025, we've met 26% of that. So we're a good way there, which is 2.3 million reduced from the rent costs through lease exits. And then in KPI 5 was at least 40% reduction in energy consumption of the NICS office estate, and we are now 23%, and that is on the data for 23-24. we will not finalise the data on 24-25 until around August 2025. So we're further ahead of that than we actually can report at this stage.
It might be an idiotic question, but why are we, if 28 buildings have been divested, and 16 have been divested so far out of the 28 target, so that means you're ahead of target in terms of divesting from buildings. Why then are you slightly behind the curve in terms of the net internal area? As in, so that I presume that it measures the internal office space and one is the literal number of buildings. It seems a bit counterintuitive that you can be on target on one and behind on the other.
Very good question, and it is because some of the buildings that we've divested out are quite a small footprint. The reason that we're amber on the net internal area, which was KPI 2, is because we'd hoped to divest of Clarence Court, which is one of our largest buildings in the estate. Had we divested of that, we would have been on target, but we're remarketing that. So we're hoping that will come through on the 25-26. But it is symptomatic of the number of offices doesn't automatically equate to the internal area.
Okay.
But when we do divest of some of our larger buildings, that will certainly bring us back on track. Yeah. And then the last KPI was 42% reduction in workstations, and we are 20% on our way to achieving that target. We've reduced the workstations by 3,385 of an original, I think we were 16,000 or thereabouts. So we believe that is a good progress in terms of the KPIs that we set for ourselves. In terms of the 25-26 priorities to progress phase 1, this will include Victoria Hall and Clarence Court. Obviously we'd hope to divest of those in 24-25. They're now in the 25-26 portfolio, and we have 4 offices further that will be divested, and will reduce the in-scope office estate by a further 18,427 square metres. So we believe we've set ourselves ambitious and stretching targets, but where we are now in 2025, we believe we're on our way to completing those. In preparation for phase 2 of the NICS estate strategy, so you'll notice the strategy is deliberately, phase 1 is leaner, which reduces our estate by the 40% net internal area. The second phase, post 2028, is the greener and more modern office estate. And that will bring into us identifying signature buildings. It will also help us in the decarbonisation journey towards net zero in 2050. Yeah. So the department, in terms of our preparation for phase 2, plans to commence a procurement for a carbon baselining exercise of the retained office estate and appoint a contractor to deliver photovoltaic equipment on the Stormont estate to generate renewable energy, which will hopefully provide energy to all of the offices, the DOF maintained offices on the Stormont estate. So I'm going to stop there, Chair, and just open up for questions.
Okay, members, please do indicate, should you wish, we have a few members indicating already, and indicate should you wish to come in. Just on the, to go back, first of all, to the 2 transactions that I think prompted us to think, God, we'd love to have Sharon and her team in to give us evidence again, and that is Clarence Court and Victoria Hall. Could you explain in summary, and if there's any commercial information you wish to redact, that's totally fine, but what we do know is in the public domain is the department thought that it was all done and dusted and those buildings had been sold. They now don't think that, or you don't think that. Could you give us a quick summary outline of what happened with those 2 properties?
Well, as part of the October monitoring round, DOF surrendered 21.2 million capital budget to the Centre for reallocation, and that was based on the anticipated sales of not only Clarence Court and Victoria Hall, but it included the Netherley and a few other buildings of a smaller amount, but all of those encapsulated was the 21.2 million. Obviously,
and those are, just to crystallise that point for the record, that was capital released to the centre, or to the department released capital to itself, to the centre, because it was going to receive, there was going to be a receipt of just over 20 million quid for these buildings, and that was going to score basically effectively as a receipt, and therefore a reduced capital requirement for the executive overall.
The receipt would have been 16 million.
16, okay.
For those 2, yeah.
For those 2, okay. Sorry, go on ahead, Aisha.
So unfortunately, despite significant work and continuous engagement with the prospective buyers via the estate agents, these sales didn't materialise. Now, we had the heads of agreement, which is your first sign of a sale, in June 2024. So that gave us the confidence as we were going through the monitoring rounds, and we were LPS, who act on for all public sector disposals, working very closely with the estate agent and the buyers. We had concrete dates, and the last date that we had, a firm date, was February. I think it was around the 20th of February. But that didn't materialise, so...
The 20th February is going to be a date of completion for both, or for which one?
Both.
For both?
It's the same buyer for both.
It's the same buyer,
buildings.
okay.
So I suppose we had confidence and assurance that obviously with the experience that we'd had, Netherly was a very rapid sale, so we had that experience that this can happen.
Yes.
Particularly when you have a heads of agreement in June 2024, you do expect to complete the sale within 2025-26. There was a small risk that everyone was made aware of, but in terms of trying to work across the silos, DOF was prepared to use those potential receipts, to allow New Housing and DFC and NI Water some funding there, rather than get the sale completed in February and have that 16 million at that time and then have to return it and not be able to use it for the block.
What is the status of those transactions now? Has that buyer walked away completely?
We are remarketing it, so sale agreed, and we made the decision, the department made the decision in April, the 5th of April, that we could no longer hold, because we're now into a new financial year. We're hoping to get those sales concluded, so we're revaluation, business case, addendums, and back to remarket, and we're hoping to remarket in June. You're entitled to not say anything you think it would be commercially prejudicial, but those specific parties who were going to buy, are they sort of, are they walked away from the transaction, or are they still interested? Our last signal is that they're still interested, but we feel in the best interests of the department that we should put it back on the market, and that bidder can come back in with their offer if they so wish to do so. But we believe by reopening again, it will give more people an opportunity to put a bid forward. It'll certainly give us more assurance that we can conclude 25-26. So that's the position we're in.
Again, say you're entitled to redact anything you think is commercially prejudicial. Did they offer, the people who were going to buy, did they simply say, did they offer, what was the explanation? Obviously people might have been through property transactions. There are searches that have to be gone through, people have to get financing in place, etc. The same goes for commercial properties, but what was the explanation? Was the explanation that we just need longer to finalise financing, or was it more substantial than that? What was the... That was
the rationale for prolonging just the funds availability of funds. So that bidder may still be the most advantageous that comes through the process, but we do believe by reopening it again that gives us the best opportunity to get a sale in 25-26. Okay,
I just want to ask to go back. I'm sure others may want to ask about that too. Just to go back on the broader Next Estate strategy. So it's certainly encouraging that 5 out of the 6 KPIs are green, and there's an explanation for why one of them isn't. Looking at the estate strategy, obviously it was first formulated whenever we were in the immediate post-COVID period, and there's a lot more flexible working, and I assume that has continued. What has changed? So, for example, whenever the estate strategy was first articulated back then, there was a view that there was going to be a structural downward pressure on the amount of office usage, and that was going to impact on all sorts of things, including how organisations, including the public sector, manage their estate. Have any of those assumptions changed in terms of, for example, the number of civil servants attending the office? Have they changed since 2022?
I would say the expectations that we had were around 40% office accommodation occupation. There may be... now it's reminded me the design was 50 overall, but generally when we start to work with organisations it comes in around 40, but the design principles start at 50. When the reform of property management was formulating its sort of usage of the estate probably back in 2019, they actually thought the occupation at that stage was about 60%, so this was very much pre-COVID. So they already identified a 40% surplus. Now the difficulty with surplus is it could be a desk, a bank of desks in an office. You never will have a building that you can suddenly, dispose of. So that's why it had to be worked through very carefully and very responsibly in terms of what is the need for the departments occupying that building. One of the other principles that we adopted was that in terms of regional balance, that we wouldn't take office accommodation out of a region, we would consolidate within the region, and thankfully within the strategy we've been able to stick to that, and a lot of the divestments are actually in the city centre, so and particularly lease exits have been in the city centre, so we've been able to make sure that the strategy was responsible. But in terms of the assumptions that were made at the outset, they're still the assumptions we're working towards.
Okay. Now, did you come on now? I'm glad you've mentioned divestments to the city centre. Now, it's not just about Belfast, but there's about other urban areas and towns. Is there a specific bias in favour of town and city centres in the estate strategy? And should there be?
Well, if anything, in terms of our first phase, it's probably the opposite, because most of the divestments are from the city centre. There has been a consolidation within the city centre. What we're also hoping to do is for the significant regions where we have a footprint, that we have signature buildings as well. So we're looking at Omagh at the minute in terms of a signature building.
Yeah.
We've been able to exit 2 leases in Omagh and move them into a reformed
The centre of Omagh?
County Hall in Omagh.
Yeah. And I suppose that's my question, and then I want to ask how if this factors in with the people strategy. And this is, I admit this is a kind of personal view, I'm genuinely baffled when I see Clare House. I think what an absolutely insane place to have 2 now departments. Like, first of all, there's no economic multiplier for the area. People can't buy a coffee unless someone comes round in a van. There's no canteen. They can't go to shop at lunchtime. They can't go for a cup of tea, a drink after work, a bite to eat. I suppose my question is, shouldn't we be getting more people, not just into Belfast, I'm obviously, and others in this room will be, big supporter of Belfast City Centre, but also shouldn't we be getting them into Omagh Town Centre and Downpatrick Town Centre and Coleraine Town Centre and Derry City Centre, so that rather than have them drive to some out of town place where they can't add any economic value to the local area, and obviously, and the carbon footprint of having to use your car because public transport's less of an option, shouldn't we be trying to get people into town and city centres where they can shop at lunchtime? They don't have to shop, but do you see what I mean? I suppose that my question is, shouldn't that be a major driving thing for the state?
What I can say is we couldn't do everything at the same time, Chair. So what we've decided to do is divest. That's the first thing. We need to find an office estate that meets the needs of the civil servants we have and the working patterns that most people are now accustomed to. The next stage is the greener and more modern, and the more modern will take into consideration, is this building situated where you would like to, leave your children off to childcare on the way to work, or to do your shopping, or whatever else that people want to do, because we have very little other levers to attract people to the civil service, and one of those levers is where you work and you spend a lot of time during the day. So that is our phase 2, that's our post 2028. What we're also doing in preparation for that is condition surveys, because one of the things to get to greener is this building, is it going to be easy to get it to, your net zero standard, or even the most energy efficient as possible. If not, we may have difficult decisions to make in terms of where buildings are sited. But as occupants of Clare House, well, me in particular, I do know it's very difficult to get a coffee.
I feel awful for you having to work. I think it's a dreadful place to have and it's my personal opinion, I just think it's a real shame that the civil service puts people there, and I feel bad for people who have to work there. That's an awful thing to say.
What I will say is, of all the
it's
offices,
a nice view,
of all the offices I've worked in, Clare House is the best standard. It is the best standard. It is a really good location in terms of if people want to get out and get a bit of fresh air, and there's brilliant, window on wildlife. There's really good. Yes,
I know. But if you want to go to a meeting, if you have to go to a meeting with someone from a different department or someone from a bank or a business or a trade union, you can walk to Hollywood, you can hitchhike to Hollywood train station or Sydenham, or... In
terms of active travel and sustainable travel, it's certainly, and our staff would actually say that if they have to get a bus there, it's not one bus, it's 2 buses, and the infrequency of buses, so that is part of the overall modern and greener post-2028. But where we need to get to, and we have a very small accommodation team, is to the size that the civil service needs, and then in that retained estate, is this where we want to have civil servants located? Is it the best for regional balance, which the Minister is very keen on, or economic generation? So that is their phase 2.
I'm going to bring in others now. Diane Forsyth, Deputy Chair.
Yeah, thank you, Chair, and thank you all for coming, and appreciate the progress report. I think that's really important that we get these, throughout the process to see how things are going. It's good to see so many things green, and whenever we're talking about public sector reform and seeing these savings come through, there's things like the rates, you're not just saving paying them, by actually disposing of it. That's almost like a double value, because you're going to be able to collect them off someone else. So it's good to see all of the progress. I wanted to ask what sort of level of engagement there's been with DAERA in terms of the climate action plan, where public sector bodies will be relied upon to reduce emissions over the next 5 years.
Well, as it happens, I've just come from a decarbonisation SRO event in the pavilion, and DAERA were doing the presentation. So where we are on that journey, we are working very closely with DAERA and other departments. Most departments were represented, because the public, we actually found that in terms of the public sector footprint, that is a very small part of the whole decarbonisation, but it's still a very important one, and it's one we can influence. So we are working very closely in DAERA. Part of the launch of the strategy was that by reducing our footprint by 40%, there would have been a natural reduction of our carbon footprint by that same amount. So that was our first, but I think we're very invested in terms of our baselining, because we don't know the carbon in our state. We know the energy consumption, but we're now looking at what the carbon is and how, and again it comes back to the people travelling to the building. Is it in the right location? Does it promote active travel? So that is our next phase. So, but we are working very closely with DAERA on that.
Yeah, we actually engaged with DAERA on how to carry out the carbon baselining project, because they've done some work in that area as well. So we're working quite closely with them. And in Properties Division, I've spoken to you before. We've spoken to you before. We also have the Building Regulations team, who would be, would work really, really closely in terms of the Carbon Action Plan, work closely with DAERA as well. So it's feeding into the work that we do from that angle as well.
It was good to hear the joined up working in terms of this. The Chair had already kind of touched on this, and you've answered it to some degree, but I had put in a question before, because I was quite interested in terms of the percentage occupancy assumed by the civil service as you move to do the office review, and I had the Assembly question come back to say the assumption is a 50% occupancy, but now that you've said that that's actually based on pre-COVID times, I'm wondering what the occupancy actually is now. And I fully appreciate your Properties Division and elsewhere in Department for Finance, it's the HR management there, but do you think it'd be a fair assumption that it would be substantially less occupancy now, given the move to hybrid working?
The design standard is the standard that we apply across the estate. When this was first looked at, it looked at the occupancy levels on any average day was in the 60%. So that was that wasn't just that we had space for 40% of people that we didn't employ. That included people who might have been off for a day, might have been off sick, and there was a 60%. The design then went to 50%, but we do work, and Niall and myself would work quite closely with the departments, or we're working on actual projects. And so, for example, Clare House would be at a level of the ratio between people and desks would be below 40%. So it depends on what the actual the delivery method that the organisation is going to use, and the number of people that they want in, and how they're going to use people. So if they want more collaboration space, for example, then there'll be fewer workstations. So that's how we try to work with it. But 50% is basically the starting point, the design standard, and then we work with them from there.
And would there be an ongoing review to try to bring this to kind of the current percentage? I know obviously you've took that at a point in time and the estate strategy has moved forward, but would this be something that you would expect to see new data coming through in terms of current levels of occupancy, with the majority of staff working more hybrid working since COVID?
We constantly review, and there are buildings that weren't in the first phase that we are looking to. I think Minister spoke at the question time about Coleraine County Hall. We know that's under occupied. It wasn't part of the first phase, but because of the working patterns now, we're giving ourselves 18 months to review, are there any other locations in the area that we can consolidate into that, or can we move out of that? So we have to keep all of our buildings under review, because again, we're very conscious that this is public money, and if we don't need it in the buildings, we can divert that money elsewhere. So we're very conscious. The other thing is everything's becoming more expensive, so even to stand still you have to reduce the size of your estate, because if you don't, your costs for maintenance, energy and rates and rent will just continue to increase. So we're very mindful that every building that is under occupied, there's responsibility on all civil servants, because our properties division doesn't cite on all of them, so we do rely on the data from departments. But we meet with the departments once every 6 months in terms of a key account review. So we make sure that we are constantly updating the data that we have in terms of the occupancy.
That 6 month chair is formal meetings. We would be speaking to them almost every week. Most of the contacts in the other departments, and I think that. In terms of the general occupancy levels, it's interesting that some of the debates that we would have with others would be, you need to keep more space so that if more people start to come back or other people are employed in the service, that there's space for them, you know. But it's not just one way, is what I mean. Some people think we should keep more space, but our view is we constantly review those numbers, but the design average is 50%. We don't go above that.
And again, this would be an ongoing debate in terms of people moving back to the office space, and it'll be something that would come through quite regularly to me in my office, where people are having difficulty accessing a lot of public services whenever people are working from home. So what I was wondering is there an assumption in terms of if there's low occupancy, so you're saying there's an ongoing review and you're saying keep space for people to come back, but would there be a review of productivity levels of certain departments as they currently are, to say, okay, we've got a really low percentage of people actually in the office, there's a real impact on productivity and turnaround, so actually we need to review and come back? Or are these things happening simultaneously? Because I know you obviously are taking the direction from the properties piece, but are those other conversations happening as well?
Well, we know there's a review from a HR perspective on the hybrid working policy, and that I think that's imminent to come through, and that will look at should there be a direction towards back to the office. But every policy decision will impact on the space that we have. At the minute, we think we have sufficient space for whatever policy levers are there, but if they were, for example, to say everybody's coming back 4 days a week, we wouldn't have the space, we wouldn't have the physical accommodation for people to do that. So we're very mindful. I'm not aware of what's in the hybrid working policy, what the outcome of that is, but we believe that we have sufficient accommodation to occupy the civil servants.
Obviously every rule's got a completely different aspect,
and some are 5 days a week. Courts, other areas are 5 days a week, and we have to be mindful of that too.
Yeah, because some people, the tasks that they have, they don't have, the choice to be at home, so just the nature of the job. And just one final thing, I just wonder, how does this strategy match with other jurisdictions, especially with some of the reforms announced by the Labour government in terms of the home civil service?
We recently saw a progress update from the Government Property Agency, and we believe we're actually ahead. In fact, I think some people were quite aghast when we said 40% reduction. I think a lot of people thought that was too much too quickly, but we have been very responsible in terms of the exit of our leases and the properties that we're putting on the market to make sure we're getting the best returns for the public sector, but we're also not keeping properties just to keep our portfolio at a certain size. So we do believe we're probably ambitious than most, but we have 66 buildings, which isn't a huge amount, but we do believe we're certainly maybe ahead of most jurisdictions.
Okay. Philip Brett.
Thank you, Chair. And thank you all for your really important work on this. I just wanted to tease out the 16 offices that have been divested so far. What's the breakdown in terms of sales / leaving of a lease, or maybe leasing them to another party?
Say that again.
I wanted to see the breakdown of the 16 divesting that you've done. Is that all just exiting a lease, or are some of those sales?
Them here. Most of them are actually sales. Have
Okay.
you got them in front of you? Oh yes, here we go. So we have, I can go through them year by year and what the disposal was, if that's helpful. Or,
Yeah,
or we can come back to you in writing if that's...
Well, it depends how. We'd be helpful to have it in writing. but perhaps, I don't know if Mr. Brett wants the key ones.
Well, even just in terms of counting them down, 1, 2, 3, 4 lease sales, or 4 lease exits. We have 1, 2, 3, 4 demolitions, and we have 1, 2, 3, 4, 5 sales, and we have 2 that were transferred to another department who occupied them and managed them, and it was just a change of title and ownership.
And of those 5 sales, then what was the capital receipt that has been?
Oh, I could probably do a very crude calculation.
We'd have to come back. That's the running cost. So
Okay.
that's not
So-
the actual
oh, yeah.
capital cost.
Okay.
So we'd need to come back to that.
Okay. No problem. Thank you.
You said 4 demolitions. So of the, how many disposals was it? 16?
Yep.
So a quarter of them were demolitions. Which ones? Can you tell us which ones those were?
Yes, we have Hillview Buildings, and all of them are on the Stormont estate in terms of these. So Hillview Buildings, we had 2 sectional buildings in what was called the Wall Garden, which is just on the other side of Stormont House, and we had Dundonald House Annex B and Dundonald House Annex D.
Yeah. Okay. They were so they okay. So they were those, just so I'm clear, those weren't the kind of prefab modular ones. They were. Is that, so those were the ones that have been, okay, not to be sceptical, just I think some people might be slightly, I don't know, because I'm glad that the rag rating is green, but not me, obviously I'm not sceptical, this might raise an eyebrow saying getting rid of a modular hut is the same, is a demolition in the same way that, and is a disposal that counts the same as selling a building for 10 million quid or something.
Well, it is a divestment, and we
Okay.
did have people there. We had workstations there. They were working offices at one stage. We haven't counted in this Rathgale Tower, which was a sizable office accommodation because it was divested of well, it wasn't divested of, but it was certainly vacated quite a long time ago. But the demolition is only completed in this financial year.
Part of the strategy, just one click, and I'll bring this for Owen Tennyson to come in. Is part of the strategy to get everybody out of modular accommodation? Mobiles, they used to call them in my school.
To state that was now that it was a lot easier than it sounded. It was a lot more difficult. Yeah.
Reverse that statement.
Yeah.
It was
Well, are they now? Is everyone?
This is my positive thinking, because some people just wanted, like, literally Hillview was quite sought after, but it was not fit for purpose.
People wanted to work in this particular mobile hut.
Yeah.
Right. Okay. For what reason?
Location is incredibly
Electric
important to
capability.
people,
Yeah.
and you would be, or you probably wouldn't be surprised, but it is surprising how hard it is to get people away from those. Especially there's car parking up here, and for some people that's really, really important, and particularly if people that are in and out during the day. So we had colleagues from DFI who found the location very useful for them, because there was always a space that they could get back in and out of. So over the years,
With parking rather than they're not being in modular accommodation. Okay, but just do you know how many? There are still a number of civil servants who are working from modular accommodation.
A lot fewer, but there are, yes, still some.
Okay. The intention is to get them all out. Okay. Owen Tennyson.
Thank you, Chair, and thank you, Sharon, for that update. And you'll forgive me, Sharon, for being really parochial in my question. And that is obviously Marlborough House is one of the sites that you're hoping to divest. I think it was 2026 was the last that I saw. And depending on who you speak to in my constituency, it's either an important part of our built heritage or it's an eyesore, and I'm firmly in the eyesore camp. But there's obviously been, I guess, the issues around potential listing of that building, which concerns me on 2 fronts. It limits its future potential use on more of other public sector entities who would be interested in taking on that site and bringing it into use for the area. And also just in terms of that green agenda, I don't know how you would bring Marlborough House up to any kind of energy efficiency standard as it is, never mind if it was a listed building. So it's just really to get an update about where that is and where that engagement lies.
Notice has issued to all occupants of our plans, of the department's plans to vacate the building, and there's a few non-departmental public bodies in there, so all of the agreements end at the end of 2025. So our plan is still actually to vacate by December 2025. Our preferred option selected for our move for civil servants is to High Street Mall Portadown for replacement accommodation. Concept plans have been agreed with the core end users. The High Street Mall developers team is currently preparing fit out for the cost for inclusion, and so we can put that in our appraisal report. The Department for Communities, HED, Historical Environment Division, has advised that the outcome of the potential listing will be known by the end of July 2025. So we are, like everyone else, waiting for the outcome of that potential listing. Now, we have put the same concerns that you have in terms of after vacation, what may not happen to that building. We know from our own research that there's no other public sector office that wants to move in or needs a building of that size in that area.
Yeah.
And we were working very closely with another public sector body who had plans for the site but not potentially the building. However, we're still continuing to work with them because I think it's in everybody's vested interest to make sure that that doesn't end in dereliction, that we try and maximise the potential for that site irrespective of what the potential listing outcome is.
No, that's useful, thank you. And just to follow on from that, I guess another two questions. So what consideration is there, or how has the situation been managed whereby you are vacating a building where there are other tenants and occupants who are maybe affected by that move, and how has that been working? And then secondly, I mean, how is the engagement with other parts of the public sector who are probably the most likely candidates to want to take on some of these office accommodations?
I'll let Niall come in on the consultation with the departments that are involved occupying the building, but in terms of the other public sector bodies, we were working with them well before we even knew of a potential listing outcome in terms of a really useful, repurposing of that site for a lot of regional and, revitalisation of that side of Craigavon. Now that still continues. Obviously, the potential listing makes their proposals in terms of suitability and viability more difficult. So they have to go back to the business case stage in terms of whether it's affordable, viable, and suitable for their needs. And that's the position that we're in at the minute. But we'll continue to work closely with them because it's the only potential opportunity to keep it in the public sector that we believe is on the cards at the minute. Do you want to come in terms of the occupants?
Yeah, in terms of the engagement, there's multiple groups in Marlborough House, as there is in a number of the regional estate buildings. So we've a couple of core civil service departments. DFI is the biggest one. We've done obviously a lot of engagement with them to inform the Portadown solution, to understand what their business needs are, what they need, and they've been involved in the planning and that and so forth. So in terms of other groups in that building, for example, Housing Executive have space of us, and that they have their own accommodation budget. We're just their landlord. So I think as Sharon has outlined, we give them early notice that they had to be by a certain date, but it's for them to provide the source their own accommodation in the area because they have their own accommodation budget. So it depends the nature of the tenant, how they're dealt with.
And is that the experience across Northern Ireland? I mean, have there been issues, I guess is my question, more broadly in terms of managing that relationship at a number of different sites?
There hasn't been thus far. I mean, obviously we've outlined a lot of work that has been delivered by the department. There's been a lot of projects in that, and there's been a lot of engagement that's going on with a lot of end users and occupants and thus far things have moved reasonably smoothly. But again, I have a very good team who does that, and we have a lot of experience in delivering accommodation projects. It's just the scope and the scale of this is perhaps greater than it has been over the previous years.
Yeah. But our working relationship with those groups is always very positive. So over the years we've done our best to help out where we can, and we'll continue to do that.
That's useful, thank you, Chair.
No problem. The next is Paul Frew.
Thank you, Chair. Thank you very much for your detailed presentation. Your key performance indicators, the one with regards to the energy consumption, surely you meet that by default if you meet KPI 1. If you actually divest buildings, you then reduce the energy consumption. If your target's 40%, to divest 40% of your buildings, you should then by default get 40% reduction in your kilowatt hours. Would that be a natural assumption?
It's not a bad rule of thumb because and I think the strategy is quite clear about that up until 2028 we're focusing on the lean bit, and that our contribution to the climate change agenda and to carbon reduction will be largely around what you've just described, actually reduction of the footprint. But there are other things that are going on as well. In the sidelines of this, we've had quite a number project, light replacing projects, replacing boilers that would go on as well. So we do that kind of work as well. And I suppose it's probably worth noting that over the years, with fewer people in the buildings as well, there's probably a reduced energy usage in them as well. But I think you're not far wrong that the big hit here is the reduction in the footprint.
Is there a worry that what you're basically doing, you're okay when you're closing business or buildings?
Yeah.
You're okay when you're closing buildings, but you'll get to a pinch point where you're having to retain some buildings.
Yeah.
But then also have people working from home. So is there a danger that you're basically just divesting the energy consumption onto the domestic market?
There probably, it's hard to escape that there probably will be a part of that. If people are working from home, they may have to use energy in the house that they maybe wouldn't have used if they weren't there during the day. So I do accept that there's probably an element of displacement in this as well, yeah.
I suppose the trade-off of that is the miles travelled, because it's all the whole carbon assessment. But you are right, it is a crude instrument to say 40% reduction in buildings, 40% reduction in energy consumption. But if we go back to Marlborough House is our worst performing energy building. So if we were to retain that in the estate, that would actually not help us. Mm-hmm. So by divesting of that building actually means more than one building coming out of the estate in terms of energy reduction. So
yeah, we had that very discussion. As I said, the building regulations team would be part of our group, and we've had quite a few debates around exactly how one would go about this. But we are looking at other things, and Niall could talk about because I'm certainly not an expert in it, but the geothermal project we're talking about up here, or the PV array that we're talking about up here, that may help us that in the future that we take fossil fuels out of certainly the the Stormont estate, and possibly will help us to understand through those studies what we can actually do in reality on the rest of our estate. But really, up to 2028, its footprint, that's what we're focusing on.
I take it that you will have already went through a suite of changes with regards to bulb replacement to LED, movement sensors on all lighting apparatus.
We've done a lot of that over the years, even before the strategy. We would have been working on that, but when money is available, we will do those.
So that kind of stuff, LED replacement, high efficiency boilers, all that kind of, optimising the heating systems. We've already been through that kind of low hanging fruit. And as Desi has said, there are still those tactical interventions that we're doing, that he's mentioned, and other things in the estate to try and bring down the energy consumption. But the biggest bit will be less footprint equals less energy.
Yeah. But as Sharon has said, there is that trade-off if people aren't travelling as well. It's a very, very difficult calculation, and anybody that says they fully understand it's better than me, it's a very, very difficult sort of calculation to measure how much the travel takes out. Does that balance out what you use in the house? And
with regards to the solar panel projects here on Stormont Estate, where are they to be placed? On parkland, car park, roof space?
The assumption at the minute is the 11-acre field,
which is an agricultural field at present.
Basically, it's
rented out for.
When I say it's called the 11-acre field, it's scrub.
Right, okay. Right.
So it has no real value in terms of the minute. But it does need cleared, and area-wise we're talking substantially less than half of it, and we can still get our connection into the high voltage ring, because we're going to have to connect into that obviously. So it kind of looks like a good location. It's shielded by trees, so it won't be seen, so all those kind of things kind of.
And then you have to step through statutory processes as well. I think it needs planning permission, doesn't it?
Yeah, well.
So I was going to ask about planning permission, grid connection, costs then of installation, and then is there any trees been felled for the?
No, because if you saw a satellite image of it and you looked just north of this building to the east, you will see the field basically surrounded by trees. There's just a big open area.
Yeah, and so the connection costs and the installation costs then, has that been factored into the plans?
That's all in the business case. Obviously the connection cost is to the network. I mean, the network is owned you may be aware, the department owns the high voltage network on the estate. The networks do not own it, so we own the 3.3 kV network. So it's it's our own connection that we're making to our own network.
You do? Yeah, that's something I didn't know. So Sony or NIE do not own any of the grid in.
They provide
Storm
us
Estate?
with a 3.3 kV feed, and the high voltage network around the estate belongs to the department and feeds all the buildings off the estate, and actually feeds AFBI. So.
Okay, that's interesting.
We've extended an invitation if you're interested to come,
Oh, yes.
and we'll show you all of this.
Don't
say no immediately.
I don't know if you know who you're dealing with here with regards to energy policy.
but the invitation's there.
No problem. Thank you. That's it, Chair. Thank you.
That's it from me. I think, members, we have nobody else who has indicated they wish to ask a question. One final one from me is there are you specifically feeding in to the a separate strategy, particularly that's come out today, that it's connected, particularly the questions of the Deputy Chair and myself, which is the people strategy. So in terms of, obviously I would assume there's engagement with the trade union side on all this, but also, you talked about before, creating a place, these are spaces people want to work. So yes, can people access childcare? Sometimes is there parking? Also, I suppose the question I would ask is, if we're trying to get younger staff, bluntly, that's not we're all age, but getting people, we have a bit of a rebalancing issue in terms of the age profile. In fact, we've got a lot of people going to be retiring and are retiring as we go on in the Northern Civil Service. Getting those people who want to work in an office in the centre of a city or town, and kind of excited about that prospect when maybe they're in their 20s or early 30s, right before they have all those responsibilities that stop us from. Do you see what I mean? So I'm just interested if that's part of your working as well.
Well, it's part of the people strategy in terms of the physical environment that people
Good.
are working in. So yes, it is part of the people strategy.
And that includes the location and accessibility in terms of the centre of towns and cities.
Not specific on that, but it is
Okay.
part of making sure that we have a modern office location.
Did you argue?
I was going to ask it and then I thought with time I wouldn't, but now that you're talking about it, I was going to ask really the engagement with local councils then, in terms of their local development plans, and obviously if the estates are being looked at from all departments, there can be an opportunity then to start to align to some of their growth strategies around repopulating towns and city centres in terms of housing. So obviously the condition surveys are going to be important in repurposing buildings, and I suppose when you get into the next phase of work, you're scaling down what we have now, but then are they in the right place? Mm-hmm. Are they even the right types of buildings? Because I think that's Clarence Court never should have been built. I live in the community beside it, and it just blights the landscape, the streetscape, and it was never fit for purpose even for people working in it. So it's lessons learned from that poor design as well. So not just looking at the cost savings, but as you say, how people who are working there feel about it and the wider community and environment. But it is that issue then of repurposing, and particularly when there's a large scale of these being offloaded in Belfast, for example. They're not always easy to repurpose into other uses, and that's part of the challenge and the cost then to repurpose them into other uses. So it's just making sure in the next phase of the strategy that it is thinking more widely in terms of that regeneration, not just in terms of the civil servants who work, but just in the locality, and a responsibility that we have in terms of the wider programme for government priorities. So it was just, is there that engagement with councils then, and how all of our strategies can align more and kind of, as you say, break down that siloed approach?
We see it as a really brilliant opportunity for working closely with certainly the ones that are developing their civic hubs. We're already very far down the line with Ards and North Downbar Council in terms of a central Bangor site, because if you know Bangor, we have offices in Rathgale and we also have JBO in Hamilton Road, which is more of a residential side. So, and I think it's certainly looking at it from a civil service point of view, but also looking at it from a citizen point of view. How do they want to interact? If they do have to visit an office with central local government, it should be indivisible. If it's services to the citizen, those services should be where it's more appropriate for that citizen interaction. So we're working closely with Bangor. We have worked with Craigavon Council in terms of office space that could accommodate either ourselves, and I know Housing Executive we're looking at that as well. We literally need to think as a single government approach in terms of our accommodation, because the local council's offices are also feeling the same about hybrid working as we are, so it's a perfect time to align those. So part of Solace is the agenda is looking at what we can do to collaborate more across that, and we wouldn't want to open an office if there's a civic project that could accommodate our needs in the area. So we see this as a massive opportunity for us.
I suppose it was just to add, if you're coming back again to committee, just to give some examples, of work that is being done in that collaborative space. I think I'd be keen to see.
We're hoping we'll have Bangor, more details on the Bangor one.
Brilliant, no worries. Thank you.
So yes, thank you.
Okay, thank you very much for that. Sharon, Desi and Niall, please do obviously keep us posted on further developments in terms of the estate strategy and divestment, disposal, and all of that. I think lots of food for thought for us, and also I think linkages with the people strategy. I think that's one for us to remember and put a bookmark in, because I think there is something there. I confess that I quite like Marlborough House. I'm in a very small minority of people who quite like brutalist architecture, but I accept there are practical challenges and listing and all of that. But anyway, aesthetically I quite like it. But what do I know?
I think the architects would say it's a great example of brutalist architecture.
I like brutalist architecture. I like lots of unpopular things. People might make jokes about my party there, but I wouldn't be so cruel. Anyway, thank you very much.
Thank you.
Right.
I'm more interested in Paul building his wee energy commune here up in Stormont.
Belfast is one of the best, the best brutalist building in Ireland, which is the Ulster Museum, is the extension and it's a brilliant example. But right, members, I don't think we have any specific follow-up actions. Unless I've missed
No, we haven't. Just as you say, we'll keep this on our radar for regular briefings.
Yes. Okay. The next agenda item is the main estimates 25-26 and budget number 2 build. If members are agreed, we will have Hansard report this oral briefing. At page 135 of the meeting pack, there's a clerk's cover note and relevant correspondence from the Minister, which is at page 142. At page 144 of the meeting pack, there is a briefing paper from the department which encloses the following: the 25-26 main estimates at page 153 of the meeting pack, the budget bill at page 421, explanatory and financial memorandum at page 458, expenditure authorised under sole authority of the budget bill at page 461, the estimates memorandum for the main estimates at page 470. Finally, at page 3 of the tabled pack, members will find a copy of the UK Government main estimates. Members will wish to note section 4.2 of the Westminster main estimates, which include a dedicated section at page 58 on Northern Ireland. Welcome to the meeting. Patrick Neeson, who is a frequent attender at this committee, head of supply division, and also Janice Maranowski, who is also now in this public spending group principal at the public supply division of the public spending group. Welcome, I think this is your first time, Janice, in front of the committee, but it won't be your last unless you're very lucky. Patrick, please do, as always, make some brief remarks for us.
Okay, thank you. So I'll keep this reasonably brief to allow time for questions. So, as the committee will be aware, the budget bill is based on the 25-26 main estimates. Hopefully, the committee have copies of those. So these estimates reflect the opening budget positions for departments as agreed by the Executive on the 3rd of April, endorsed by the Assembly on the 19th of May. I'll briefly just set out what the estimates contain, in case it's helpful. So Part 1, that outlines the key information that will be voted by the Assembly and subsequently given legal authority in the Budget Act. So that includes voted resource and capital limits for both DEL and AMA, any voted spending outside the budget, the net cash requirement, and expenditure and income limits for each voted limit. Part 2 is known as the subhead detail, so that includes a more detailed breakdown by spending area within each department of the resource and capital requirements that underpin the voted limits in Part 1. Also includes comparative figures from the previous year. Part 2 also contains what's called the resource to cash reconciliation. So that outlines the adjustments needed to reconcile the net resource and capital requirements to the net cash position. So that includes like removing non-cash items like depreciation, movements, provisions, removes arm's length bodies, resource and capital budgets, grant and aid, accounts for movement and working capital. Part 3 then is broken down and there's note A, what we call a SOCNI, Consolidated Statement of Comprehensive Net Expenditure, details income and expenditure within the departmental accounts, reconciles these figures to the resource budget and to the estimate's net resource position. Part B provides a breakdown of voted income, resource and capital split between the various categories. Part C then offers analysis of what we refer to as CFRs, Consolidated Fund Extra Receipts. And there's some additional notes providing supplementary information in relation to the data that's in Part 1 and Part 2. So that's a quick breakdown of what's in the estimates.
Yeah.
So the budget number 2 bill, as you know, provides legal authority for departments to incur, spend and use resources as set out in the estimates. Also enables the department to hold enables the Assembly to hold departments accountable for managing the resources within the limits. Obviously, one key matter for the committee's consideration is whether to grant accelerated passage for the bill.
Yeah.
As members know, it's essential to ensure the bill reflects the Executive's most up-to-date spending plans and the departments have access to the cash required to deliver services. And we know that we ask the committee routinely to support this process, so both ourselves as officials and the Minister obviously appreciative of your ongoing support in relation to that. So until the budget number 2 bill receives royal assent, departments are constrained by the spending limits in the voting account, as was provided for in the Budget Act 2025 that we passed earlier this year. And as members know, that provides cover for cash and resources based on 45% of last year's position, which we expect will be sufficient to meet departments' needs until we get royal assent, hopefully mid to late July.
Okay.
So supply resolutions to be scheduled for 3rd of June, during which the Assembly asked to approve the main estimates.
Yeah.
Quickly talk about the sole authority. Members know managing public money allows for certain spends to proceed on the sole authority of the Budget Act. So as you know, well, that's something we kind of monitored and kept an eye on. Pleased to say that the amount of money involved in terms of relying on sole authority has fallen from about 24.5 million in terms of the SSEs to around 13.4 million now. Hoping to bring forward a financial provisions bill very shortly as well. Will take care of a lot of the remaining spend under sole authority. And just finally, as members know, the positions set out in the main estimates will evolve throughout the year as a result of kind of in-year decisions, monitoring rounds and so on, and that will be reflected in the spring supplementary estimates and the associated budget bill when we do all this again in February.
Okay.
Just one final thing is just in terms of the timing, which is the final stage debate. I think we told members that was to be on the 17th. It's been brought forward to the 16th, just to note that.
Okay.
So that's us.
Okay. Okay, thank you. So just on main estimates and the Westminster main estimates, could you just set out, obviously one of the reasons we were expecting, one of the things that has been pertinent to the main estimates related at Westminster is the clarity on the quantum of support in terms of the additional cost of national employers' national insurance. Are you able to, just for the purposes of the record, I think, explain exactly how much is going to accrue to the executive to support the executive and wider public sector in terms of the additional national insurance costs?
Well, as you know, the executive agreed at the budget that there'll be additional spending provided at departments in June.
Yeah.
To help them manage the pressures resulting in increased national insurance costs. So in terms of the estimates, any additional in-year funding will be reflected in spring supplementary estimates later in the year.
So I suppose what I'm trying to say is the additional money is, it's now, you now know definitively how much it's going to be because it's included in the main estimates, and it's going to be allocated, I presume, in June. You said in June monitoring there are going to be specific allocations to departments to cover the cost of employer NICs.
It's not in the main estimates.
It's in the Westminster main estimates.
But it's not in Northern Ireland's main
It's not written
estimates.
into those main estimates.
No, because it hasn't been. No, this reflects the budget position at the start of the financial year.
But it will be in the Westminster main estimates, which have come out. Have they come out already?
They have, Chair, yeah.
Not
Yes.
sure, but
No.
in terms of any additional spend or any additional budget allocated to departments in year, is reflected in the.
That's fair enough. But the thing I'm trying to
supplementary
just the thing point I'm trying to just establish for the record is exactly what the Westminster main estimate, because that was we were told we won't know exactly. Officials told us consistently we won't know exactly how much we're getting for employer NICs until we get the Westminster main estimates. And so I'm asking the question now. So if you're unable to tell me now, we have if you could write, the department could write to us, or the DALO.
Chair, we have had.
I know we've had it in various forms, but I just want to know if, for the record, the Westminster main estimates has contained any surprises on the up or down side. So I don't know if I might be. Perhaps we can ask that question separately. Okay. In terms of other, we have it that concern. Okay, we'll double check. We'll double check that separately. Okay. In terms of other things that are in the estimates, so the June monitoring is going to follow basically immediately. Do we have a date yet, and has it been to the executive?
I think returns are due back from departments
5th of June.
5th of June, so I imagine then they'll be brought to the executive shortly after that. So we couldn't wait until that happened because of the danger around the need to get royal assent and so on before July, because departments might run out of the money they have in terms of the voted accounts. That's why
the estimates are written to incorporate June monitoring.
No, these aren't. That'll be.
It'll have to be the supplementary. They'll have to come back.
It'll be in the spring. The SSEs will reflect any in year, including June monitoring.
Okay. We'll bring in colleagues now. Dan for Shith.
Thank you, Chair, and thank you both for coming and sending the details through. I appreciate getting the hard copy as well of the estimates, although I've left it upstairs in my office right now, of course. I just wanted to ask you, Paul's got his, I just wanted to ask yourself, Patrick, would you be satisfied that if the timetable for all stages of this bill goes through, that the amounts that have been approved in the voting account will be enough to take the departments to that point?
We're content, and we have done some analysis to see when the spend that was approved in terms of the photo account is likely to last. So we believe, yes, if this goes through in the timetable set out and royal assent is granted for the end of July, that department should be okay.
Thank you. And just in terms of the returns that have came through from the different departments, are there any specific or particular pressures that you can see coming through in the 25-26 estimates you want to bring to the attention of the committee?
No, none. As I said, the main estimates reflect essentially what was agreed by the executive in terms of the budgets, and just set out how then departments intend to kind of allocate that within their department's spending areas.
Okay, Paul Frew.
Yes, thank you. On the sole authority stuff, which we always are frustrated with over the last number of years, and to acknowledge the work that the department has done in getting this down, you've reduced it again by a further 53%. Looking at it compared to last year's, it seems to be it's the Department of Communities. The welfare mitigations have been lifted out of sole authority, and I take it it's put into the mainstay of the estimates themselves. The budget itself, sorry.
Yeah, the Department for Communities brought forward legislation in relation to those welfare mitigations, which meant it didn't rely then on the sole authority of the Budget Act.
And remind me again what piece of legislation that was, if you can remember, because I can't.
I'll need to come back to you on that specific piece of legislation. I don't have it.
There's some that we've pushed through over the last couple of months.
There was legislation from memory brought forward in relation to that, yes.
Right, okay.
But I can come back to you on that one, just for the specifics.
And do you see then that the bill that the Department of Finance is bringing forward, the financial
provisions bill, should deal with a number of those remaining amounts, particularly in relation to TEO. Most of the spend that's now covered by sole authority is TEO, small amount in relation to the Fiscal Council, and there's a bill coming forward in relation to that. So I think almost all.
So I was going to say that the legislation was the welfare supplementary payment, universal credit regulations. That was brought through, I think, in March.
Yeah, okay, and that dealt with that aspect, because that was a massive block of the sole authority spend.
Yes.
Okay, and those put two bills. So I suspect both those, the two other bills, the Fiscal Council bill and then the Financial Transactions bill, will not then be in play for this time next year. So you would envisage more sole authority granted next year?
Essentially, we hope to introduce the Financial Provisions Bill this side of the summer recess. So it will depend on just how long it takes beyond that. So, with a fair wind, perhaps by this stage next year, it may be in place.
Okay, thank you. That's it. Thank you.
Okay, Philip Brett.
Thanks, Chair. No, my question was just in relation to the Financial Provisions Bill. So its draft is complete.
Draft is complete. We're hoping to get executive approval this week and then introduce shortly after. Tomorrow.
Okay.
So fingers crossed.
And then Minister will introduce first reading before summer recess.
And we're hoping sometime in June.
Very good.
We just have to get, there's a small item that needs Secretary of State consent, but it shouldn't be an issue. But as soon as that happens, then we'll seek to introduce it.
And that deals with victims' payment, funding received from Westminster for refugee funding.
Yes, it deals with a wide range of provisions across about 6 or 7 departments. So in terms of the sole authority stuff, there's a good amount of areas in terms of TEO that's relying on the sole authority of the Budget Act at the minute. That'll be dealt with by that Financial Provisions Bill.
What will that leave then in the black box?
Well, the other bill then is the Fiscal Council bill.
Yes.
So there's a small amount to spend there relying on the Sole Authority Budget Act, and there's legislation coming forward in similar timetable for that.
Okay.
So that should deal with that as well.
Okay. So that'll be that all dealt with then?
That should be it all dealt with.
Perfect.
Fingers crossed.
Okay. Thank you. No other members have indicated they wish to ask a question. I think at this stage we will release you, Patrick and Janice. Thank you very much for joining us.
Thank you.
Thank you. Now, members, we, as always, at this stage in the process, need to consider. Thank you. Need to consider the Minister's request for accelerated passage as per what happens usually in these situations. Understanding Order 42.2, the committee must decide if there has been appropriate consultation with it on the public expenditure proposals contained in the Budget Number 2 Bill 2025, notwithstanding the fact that we have, I think, legitimately done a little bit of textual critique of whether that's a advisable or worthwhile phrase that has to, and I'm not sure it is, but anyway, that's by the by. We are required to, in order to give accelerated passage or to grant accelerated passage, we are required to say that we have been granted appropriate consultation with it on the public with us, the committee, on the public expenditure proposals contained in the Budget Number 2 Bill 2025. If the committee is content, accelerated passage for the Budget Number 2 Bill 2025 will be granted, and I shall write to the Speaker accordingly. If not, then there will be a committee stage and a delay. As always with these situations, I want to point out that this is routine, but it is a substantive thing that needs to be done. Having a full committee stage on a budget bill is something that I don't believe has ever been done in the 27 years of the Northern Ireland Assembly, albeit 27 years with lots of absence. So I don't think by not granting accelerated passage we are adding to our deep scrutiny of this budget. I think we'll be doing that anyway and have done it. So I am, as chair, though I don't love the wording, happy to grant accelerated passage. Should anybody else wish to come in on that?
No, content, Chair.
Great.
Content? Okay. So I'll put the question. The Committee for Finance is content that there has been appropriate consultation with it in respect to the public expenditure proposals covered in the Budget Number 2 Bill 2025 and is willing to grant the accelerated passage for the bill. Are members content?
Agreed.
Okay, then we'll move on. I mean, I should just say, for anybody who's watching, and sometimes it's an important point, that we had a debate on the actual budget document, which is the strategic statement of Assembly priorities. This committee did indicate division, and we divided. So, not granting accelerated passage this bill is not the same as waving through all spending without scrutiny and without challenge. Okay, so the outcome of the vote is clear. I'll write to the Speaker to make clear that we have decided to grant accelerated passage to Budget Number 2, Bill 2025. The next agenda item is the monthly Outturn and Forecast Outturn restated data. We're having an oral briefing from the department. So members, that's at page 692 of the meeting pack. You will find a briefing paper from the department on 24-25 public expenditure Outturn and Forecast Outturn. Members should note that the departmental briefing paper references attendance from Joanne McBurney, but she isn't attending today. As usual, the department has reported on 4 expenditure categories: non-ring-fenced resource DEL, ring-fenced resource DEL, capital DEL, and ring-fenced FTC. Departments are required to submit a restated March position in May. This is in recognition that departments would not have all the information needed to report a year-end Outturn Forecast Outturn position by the 6th working day in April. Whilst the data being considered today does not reflect department's provisional Outturn position, which will be reported slightly later alongside June monitoring, in practice there are rarely any significant changes between the two, and the March out returns should provide a reasonable estimation of actual Outturn. In relation to overcommitments, no department has reported an overcommitment, nor is there any overcommitment on non-ring-fenced resource DEL. In relation to Outturn compared to monitoring position, departments are forecasting an overall underspend of £23 million in non-ring-fenced resource DEL, of which £3 million relates to Treasury earmarked funding, which cannot be used for any other purpose. So though it's non-ring-fenced resource DEL, it is earmarked funding, so it is not strictly completely non-ring-fenced, I think is probably fair to say. After offsetting a pressure and adjusting, this is reduced to almost £14 million, which is within the level that can be carried forward under the budget exchange scheme into 25-26. A departmental breakdown is detailed in the briefing paper. In respect of ring-fenced resource DEL, departments are forecasting a net underspend of £294 million. The majority of this is due to the underspend in student loans. That is an accounting anomaly which crops up. For capital DEL, departments are forecasting an underspend of £8.6 million. This includes a £15.6 million easement for the A5, which is funded by the Irish government. There's also a pressure at the centre of £3.5 million due to a late Barnett adjustment confirmed at Westminster supplementary estimates after January monitoring had been announced. After adjusting for the A5 easement, centre pressure and Treasury earmarked items of £0.5 million, there remains a net pressure on the block of £11 million in capital DEL, I presume that is. However, departments are forecasting sufficient underspends in resource DEL to offset the capital DEL overspend, ensuring the overall block will remain balanced. FTC departments are forecasting underspend of £2.6 million. Variations between March and March restated returns are indicated from page 736. Notably, the department has indicated that in respect of non-ring-fenced resource, the £2.4 million reduction in March is due to a delay in the start of the Integrate project work. I'm now going to seek members' agreement that we can forward all those papers to the other statutory committees, and welcome to the meeting Marianne Smith, who's Head of Central Expenditure, and Emer Rice, who is Head of In-Year Monitoring. Thank you both. I've covered quite a lot of it there in my opening remarks. I stole your thunder. Am I talking enough in this chamber? In this thing? It wasn't my notes, I wasn't just doing the sound of my own voice in this occasion. But Marianne, if you want to go on ahead and give us some of your highlights and lowlights.
Okay. So yes, I'll open with a few opening remarks, Chair. So the committee's obviously been provided with the restated March Outturn and Forecast Outturn, which is a good indication of the year-end position. The good news is that the block is overall balanced for 25-26. There's a capital DEL overspend of 11 million and an underspend in resource DEL of 24.9 million. The executive can use the resource DEL underspend to meet the capital DEL overspend, and therefore the block is balanced overall. Meeting the capital DEL underspend, there remains 14 million of resource DEL which will be carried forward under the budget exchange scheme and available then in June monitoring. We've received provisional Outturn returns from departments and we're working through those now at the moment, but we're not expecting any great changes from the position stated in the restated March Outturn and Forecast Outturn. Okay. So I'm happy to take any questions.
Okay, members as always indicate that you, should you wish to ask a question, just on the A5 easement, is that simply a product of the fact that it is not proceeding as quickly as scoring would?
Yes, Chair, that would be the case. Yeah.
Okay. Now, in relation to the other the Barnett adjustment which emerged after January monitoring, that's a Barnett adjustment in the direction we don't like.
Yes,
that's
a negative consequential.
Yes. What was the reason for that?
Treasury don't give us the reason. It must be some change in one of the Westminster departments. Overall capital then is obviously we just get the Barnett consequential, positive and negative to any changes to Whitehall.
Didn't give you any reason at all as to what the policy.
Not the detail of that. No, I'm aware of. No.
Okay. So under the budget, you are availing of the budget exchange scheme, specifically in relation to the 14 million underspend in non-ring fence resource style.
Correct.
And that's offset in a block. So in one sense you don't really totally need to, because it's kind of in a block sense you're balanced anyway. So is the budget exchange scheme relevant in that context?
Yes, so obviously there's more underspend in resource, 24.9 million in resource, 11 in capital. So 11 of the resource underspend will be used to offset the capital. So there will be 14 million of resource remaining, which then will be carried forward using the budget exchange scheme.
Okay. So the 14 million. The 14 million underspend in non-ring fenced resource style that avails of the budget exchange scheme because it's already offset by the
already
by the overspend in capital.
So that amount is available then to carry forward in 25-26 and will be made available in June monitoring then.
Okay. And just on June monitoring, excuse me. So it's going to be. We heard from your colleagues in the previous session that they are hoping to basically get returns back from the 5th of June, correct. I think is correct, from departments. So far, are there any surprising movements, any surprising reduced requirements, or hopefully there aren't too many huge pressures at this point in the financial year?
We haven't been made aware of anything yet, Chair. We're not expecting those returns until the 5th of June, so obviously departments will be working through them at the minute. Yeah, sorry.
Okay. And just in June monitoring, because there was a little bit of debate on this in the past. I remember a previous June monitoring, as in the last June monitoring happened, I think, I'm right in saying it happened in July, and it just so happened that there was an election 2 days afterwards. Do we know, is this June monitoring going to be in June? I know there's not going to be an election, but...
No, the intention is obviously for us to work at pace and develop sort of options, and then for the Finance Minister to bring forward a paper to the Executive in advance of the recess.
Advance of recess, okay.
Who knows what's in Sinn Féin's minds in regards to the election?
I order through the chair. Okay, Diane Forsyth, Deputy Chair.
Yeah, thank you, Chair, and thank you both for being here today. In terms of where we've ended up with this position of 14 million underspend to be carried forward under the budget exchange scheme. Obviously last year we weren't allowed to use that scheme because of the conditions of the financial settlement package, so it was a very last minute. We've got, I think it was about 12 million at the time, very, very sharp, within a few days turnaround, allocating it to DFI, and everything happened. So to go throughout this past financial year with people showing tens of millions of pressures month on month, to now end up at a position where actually there's a 14 million underspend, and we're very fortunate that this year it is able to be applied by the budget exchange scheme and carried into next year. If we had been like last year, you could have been at risk of losing it. Would there be learning from that in terms of how you'd be engaging with different departments as to how they're expressing their pressures and their potential tens of millions overspends and pressures in their monthly returns? Because it would appear just very concerning to me that we've landed in an underspend position, as we're seeing these Outturn reports all the time showing these pressures that we're being told are very, very real.
I think one thing that we have done this year is maybe given out, so in 25-26 departments will be able to do show an overcommitment, but they very clearly need to set out a number of things, including this year. I think the change that we've made is that any change in overcommitment from one month to the next month be more clearly explained, and obviously we'll share that with the committee as well. So hopefully that will maybe hone in on what efforts people are undertaking to meet their overcommitments, which will hopefully develop more and have more scrutiny maybe on that on the movements within departments.
And I appreciate whenever these reports are coming to this committee, reporting every month's outturn, you've got those explanations in, and it is really, really helpful to us. And then it obviously helps our committees that we're pushing that out to understand that and be able to ask, the right questions around it. Because I just would be concerned that we're coming into this 25-26 year. Say something happens, that we had some sort of, financial review or a settlement or something came along with conditions attached, and we weren't able to avail of the budget exchange scheme again. We'll end up in another panic situation where you're reallocating 10-14 million pounds. So I just again want to thank you for the detail that are coming in those reports and support you in any way of going back, because I think the realistic nature of what is a pressure or what people are just keeping in their accounts for a particular reason is really, really important for us to be able to home in on. So
I think too that last year obviously there was quite a lot of funding came through quite late in the year, and that obviously there's a change in the process this year from UKG, so there's more of the funding, so we'd expect less coming late on in the year, which obviously is easier for departments to manage as well.
No, absolutely. Thank you, Chair.
Okay, Philip Brett.
Thank you, Chair, and thank you both for coming along today. I just wanted to pick up, so page 737 of our pack, which is in Annex E, it just has about decreased resource requirements from departments. Am I reading that correctly then in relation to DFI, that they had in March a requirement, they surrendered £4.2 million for road maintenance?
So on the ring force, yes, for DFI the 4.2 million decrease is due to lower depreciation on the road network. Yep.
The position of DFI is that they couldn't spend 4.2 million on road repairs.
It's on the ring fence, does it?
Yeah.
That's the depreciation on it. So yes, there must have been less capital investment in some way.
Okay, and then secondly, just in relation to the DFC one, it's about the ongoing redevelopment of the long streets in the New Lodge in my constituency, which has been long delayed. So was this only reported in March that by DFC that they didn't believe it would be on site by the end of this year?
Sorry, I couldn't hear
Sorry,
that. Sorry.
DFC on page 737 they have long streets, or upper streets as this report calls it, but long streets is what the scheme is called. They've said that's moved into next year. Was that only reported then in March?
I'm not honestly sure.
Okay.
Yeah.
Need to check that.
Okay.
Don't have that detail here. We can follow up.
And then finally, just for me, in relation to June monitoring, how much has already been agreed by the executive for allocation?
So in June monitoring, there was some funding agreed, obviously indicative allocations for June monitoring. So there's a total of 158.5 resource DEL and I think 2 million of capital DEL, and that obviously will be actioned in June monitoring. Okay. We're still working through the outworkings of the main estimates to work out what will be available for departments. There's obviously the 14 million from the budget exchange scheme as well. And then there's some Treasury earmarked funding that we're aware of. At this point, there's about 148 million of resource DEL and 13.6 million of capital DEL that is earmarked, most of that for the NI Protocol Windsor Framework costs.
Mm-hmm. Okay. And then bids are continuing to come in?
Bids will come in 5th of June, we're expecting those in.
And I read in the press last week that the Minister for the Economy had written to the Finance Minister and executive colleagues in relation to higher education and her view that she requires allocation of further funding. Do you know how much she has written to the Minister of Finance requesting?
I'm not aware of that now, sorry.
Okay, no problem, thank you.
Okay, we've no Owen Tennis wishes to come in.
Thank you, Chair, and thank you, Marianne, for that update. Can I just ask, it's a really basic question and I should probably know the answer, but what are the current limits on the budget exchange scheme?
Do you have that?
Yeah. Now these have to be agreed by Treasury and it's subject to provisional outturn being finalised. Yeah. But is this what we expect to carry forward or the maximum amount?
Maximum amount.
Maximum. Yeah. So the maximum we could have carried forward and non-ring fence is 116.2 million. 6.5 million in ring fenced, and that includes student loan impairments, 27.4 million in capital, and 1.3 million in FTC.
So we're well within the limits on the scheme. And then my second question really was just following on from Philip. I mean, the indicative allocations for due monitoring struck me as almost premature, because, as you say, we haven't yet got the bids through to the department to be assessed. And as Diane pointed out earlier, the position has changed from March to May, even quite dramatically within departments. So I guess my question is, to what extent will there be a full review or relook at those indicative allocations against the current financial backdrop?
Obviously, we'll need to get all the information in terms of bids and the detail we have then, that, you know, without reopening final budget, obviously, you know, we can look at what the indicative allocations are, but I mean, the allocations were made for the programme for government priorities, a lot of that, you know, in the main. So to what extent the Finance Minister would want to bring recommendations to change that, you know, but it could be looked at on the round, certainly.
That's helpful, thank you. Thank you, Chair.
Okay. No one else has indicated. Oh, sorry, Paul Fruit.
Yeah, just a quick question. So again, maybe something I should know. The A5 easement money, the capital money, to the tune of 15.6 million. Surely DFI and DFI roads in particular have a rolling capital programme. So why could they not have moved that money into another main infrastructure project?
Because that was ring fenced by, it's funded by the Irish government, so it's ring fenced for the A5.
So that's that money then?
Yeah.
Right, okay. So that's that. So that capital deal is actually ring fenced?
Yes.
Capital deal?
It is, because it's being funded by the Irish government.
Which is something you don't usually get, ring fenced capital deal?
No, it's ring fenced because it's Irish government funding money, so we can't use that money for another project. We have to, you know, we can either don't draw it down or return it to the Irish government.
That puts a pretty different reflection on that sentence then. No, that's dead on. Thank you.
Okay.
Okay, thank you. No one else has indicated they wish to ask a question. So that's really helpful. Thank you, Marianne and Emer. Thank you for coming and giving us evidence. I don't think we have any other specific bits to follow up on, but we will obviously be in touch, and I'm sure we'll be hearing from you soon, including on June monitoring, hopefully.
Okay, thank you.
Thanks.
Thanks.
Okay. So we're just going to, because we are uncharacteristically running slightly ahead of time, we are going to go and do some, what's that?
I'm in shock.
Well, you know, we're
Complaining, why
no, but we're sometimes you have to do
started early,
lots of questions, and sometimes sometimes business can get done more quickly. In any case, we're going to go into correspondence now. It's agenda item 11, and first item of 10. Actually, the first item of correspondence is just the Hansard transcript on. Is the Hansard transcript on deaths, stillbirths and baby loss. That's on page 740 for the Hansard transcript of that RAISE oral briefing. To note, then the 40th report from the Examiner Statutory Rules, which is page 745. There are no rules for this committee. The next agenda item 11 is the draft forward work programme. Now, I'm just going to ask the clerk to speak to that, because there's a few bits to talk about, including in relation to the bill.
So, Chair, we've already, as members know, gone out and corresponded with a number of, I think approximately about 60 stakeholders with the bill, and we've had some initial responses. So we're pretty much confirmed that we have a briefing next week from a bereaved parent representative group. We think potentially 2 to 4, we're not quite sure yet, 4. We have 4 bereaved parents coming. So that we talked about that before. The committee had already realised that we were probably going to be doing a briefing like that. So that's scheduled for next week. We'll provide more details, obviously, in the main pack as it goes out. We also have scheduled a half-hour informal meeting prior to the committee meeting with Hospitality Ulster members. Will recall they had put in a request some time back to talk about the impacts of not just the autumn statement from the Chancellor, but subsequent other kind of macroeconomic issues that have come up. So we'll again forward information to members about that, but that's likely to be scheduled for 1:30. Hopefully in here, but potentially in the Senate if we can't get this room. We are also, members will recall, at Studio Ulster on the 11th of June, so not next week but the week after, and we thought it most appropriate to have a City and Growth Deals briefing on that date as well, because that's essentially why we're at Studio Ulster. So that's been confirmed for the 11th of June as well. Sorry, it hasn't been confirmed yet. That's still in the ethosphere waiting confirmation. No. Hopefully will be confirmed fairly quickly. The department has confirmed, and members raised this issue last week, a CSR briefing on the 18th of June. Members will be aware that CSR announces on the 11th of June. So this will effectively then be the following week we'll get a briefing from the department on just what the impact of that is.
Yeah, at the same time as our
Same time,
committee.
yeah. Just the way it always seems to
It'll
work.
probably be at midday, usually just before the committee.
Yeah. So we may get some feeling, but the
It'll be
department
after
will come
Prime
and
Minister's questions, where they usually do it on a Wednesday. They have Prime Minister's questions, and then they have the
Straight after.
fiscal event immediately afterwards.
We've confirmed that the officials will be in to brief on that one, and will probably at that point be able to give us potentially an update on timescale for June monitoring. I'm saying that, they might not agree with that necessarily at the time, but we'll see, at least if we'll have officials in front of us and we can do that. Nothing else to flag up at the minute, Chair. So that's probably all I really wanted to highlight.
Okay, members, we are now going to go back to...
we can get a members' agreement for the board to be published.
Yes, if members are content that will be published, the forward programme will be published on the website as always. Okay, we are now going to just go back to agenda item, is it 9 or 10? 10, to talk about the an LCM which has come in to us today, but which there are some issues. This is the Data Use and Access Bill. We have a bit of a challenge with this in terms of the timing of the laying of this LCM. So before we proceed, and we are hoping to get a briefing from the officials, but before we proceed, I'm going to ask if members are agreed that we go into a very short closed session to get some procedural advice from the clerk. It's normal that we go into close. By the way, this is not a closed session where we have market sensitive information and we have to not say certain words after we come back into closed session. This is just about procedure, and so normal forms that we go into closed session, we'll then go back into open session immediately afterwards, and there's nothing protected or sensitive about what we're, other than, well, there isn't actually, it's just that this is the form. So we'll go into closed session. Members are agreed? Agreed. We'll go into closed session.
Committee Room 21. Sound. 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 Committee Room 21. Sound.
Re-summarise
Yes,
for the
apologies
purposes
for
of the
that.
record. Okay. Okay, so just let me know, Heather, when we're back in open session.
Bring them up on the screen, just to confirm they're there. We're now open.
We're live, Chair. We're just trying to get the officials onto the screen. We may have some connection issues with one of the officials, but we'll do our best. So that's the officials are Colin, Geraldine, and Paul.
Yeah. Okay. So members, we have now. We're now back in open session. I think. First of all, double check. Hansard are here with us. So if people are content, Hansard are going to record this briefing with us. We have, giving us evidence, Paul Duffy, who is Deputy Secretary of Digital and Finance, Shared Services, Geraldine Devine, Director of Digital Security and Engagement, and Colin Scott, who is Head of Information Governance. To return, we were just in closed session there. We are discussing an LCM, or a proposed LCM, on the Data Use and Access Bill, which we have received today. Now, the first thing we need to establish is whether we even have time to pass an LCM. But before we get to that, could someone, either Paul, Colin or Geraldine, give us a brief opening summary of what this bill is, what it does and its proposed territorial scope?
Chair, so I will commence and then hand over to Colin Scott, who will take you through maybe a little bit more detail off the bill. But
can I just say, Paul, if it's possible, just because you're remote, if you could speak up, it would be most helpful. Just because we have members who need to, and it's I know it's slightly annoying sometimes remotely, but if you could just speak a little bit up and go ahead.
Yes, sure. Can you hear me okay now?
Yes, we can. Yeah.
Sorry, I've got a bit of a chest infection, so
okay, no worries.
Sounding a bit croaky on it. So, firstly, Chair, I just want to acknowledge that at the outset that the handling of this proposed LCM for the Data Use and Access Bill, it has not progressed as we would have intended, and we did feel the need to avail of the urgent procedures approach, given that there was a potential for royal assent being received for the bill at Westminster. Now, we've been engaging with colleagues in DCIT for a number of months now on the bill. Colin explained to you some of the processes we went through to get clarification on some of the key elements. It was our understanding that royal assent was to be received on the 19th of May, which clearly hasn't happened. But that was one of the reasons that we felt there was an urgency to proceed. And I do appreciate that limits then the time for committee consideration.
Just so I'm understanding, Paul, did you say you thought royal assent had already happened?
No, it was scheduled to happen on the 19th of May, but it hasn't happened as yet. In our understanding,
royal assent was scheduled for the 19th of May. There would have been no point in doing an LCM of any kind because.
Yeah, no, we appreciate that. It's more likely now that royal assent is going to be towards the end of June, is our understanding.
There's still ultimately really no point in doing an LCM because we can't really give consent or otherwise.
Yes, and I think in conversations with colleagues in DCIT, I think what we were very keen that there was the consent process had at least commenced, while they were progressing the bill through the parliamentary process. So we accept that it's unlikely that the process will be completed within the time frame, but it will have commenced.
But it's, with the greatest respect, the idea that commencing consent is any actual thing. It's not really whether consent commences, it's that a devolved assembly has the ability to give its consent at an early stage in the legislative process so that can be reflected. So for the record, there's no such thing, as far as I'm aware, that commencing consent is somehow better than simply not having the process in the first place. But I just want to wind back to my initial question was the Data Use and Access Bill. What is it? When was it first proposed? I think it's really important to get that clear because we're not going to be able to discuss this in any detail as a committee. So I think it's first of all really important that we get clarity on what this bill is first of all before we get into LCM. So could someone give us first of all what the bill does?
Yeah, sure. So I'll hand over to Colin, who'll talk about the purpose of the bill and the three devolved areas which the bill touches on.
Okay.
Good afternoon. Do you everybody hear me okay?
Yes.
Yes, sir.
Any problems, just tell me, I'll soon speak up a bit louder.
Sure.
So the stated purpose of the bill was to harness, the power of data for economic growth, support a modern digital government, and to improve people's lives. It's a very large and broad bill, and I suppose it came along after the DPDI bill, which was the Data Protection Digital Information Bill, I think if I'm correct, which was brought forward by the previous Conservative government, but failed to make its way fully through the House of Parliament. This bill was largely based on it, but there were some elements taken out, and there were a number of elements then that related to devolved administrations. Specifically, there were issues relating to registers of births, deaths, which extended to England and Wales only. Information standards for health and adult social care extended to England and Wales only. Smart meters, which extended to England, Wales and Scotland only. And then, of course, there's other matters such as the National Underground Asset Register, which applies to all the devolved regions, as well as smart data and extending amending Section 35 of the Digital Economy Act, which relates to data sharing between different bodies. So at this point, I think that it'd be worth saying that there was a lot of concern about this bill, I think, as it made its way through Parliament. A lot of discussion. It was originally, we were notified in October 2024 about it, that it was being brought forward through the Parliament. It was originally brought through the House of Lords committee stage and then through the House of Commons. But the devolved areas that relate to Northern Ireland are rather minor compared to the larger areas that were discussed in UK Parliament. So the three areas again are smart data, which is really about, in layman's terms, I think the best way of describing that would be if you were looking to port your like a bank account from one place to another, that you've got a standardization and it's making the public's life easier.
Yeah.
National Underground Asset Register, which is really rather self-explanatory. It's about creating an asset register for underground assets, which is DFI was a policy lead on. And then amending section 35 of the DEA, which relates to data sharing between different public bodies. I think that a part of that was to also include that maybe to some private bodies, private firms, or private businesses as well.
Yeah. So the purpose of this bill is really to simplify data sharing process, data sharing regulations.
Yes, I think about a fair way to describe it would be to modernise the previous arrangements for the current technological world we live in. That's the way I've heard it described to me.
I suppose first instance, and I don't think the committee has ever, before we get on to the principle of the LCM process, I struggled to see how the committee's ever was going to be able to do any kind of meaningful scrutiny on this, and it might just be this, however long we have you in front of us here today. I can already think of kind of local human rights conditions. I can think of cross-border challenges because we have, I don't feel, I mean, those are questions I would maybe have loved to have asked 6 months ago or 3 months ago, but in any case...
Well, I can speak to that if you want, if you don't mind.
Well, to be honest, Colin, I do mind because I don't really think I'm going to have the opportunity to scrutinise it properly, but you tell me what you think, and then, I mean, it feels like a slightly farcical position, to be honest, because I don't know, I can't, if the department is now asking us to give consent to this applying in Northern Ireland, and we then, but go ahead, address those 2 points for me. One, data protection, and as it relates to the border and GDPR, when that affects everything from the GAA to the Church of Ireland, who have shared data on a cross-border basis, and the human rights provisions. Touch on those two briefly, and then we'll move on to the LCM process.
Well, those issues were not. So the purpose of this LCM relates to three devolved matters.
Okay.
The three devolved matters are smart data, the new R, which is the National Underground Asset Register, and Section 35, the amendment of Section 35 of the Digital Economy Act.
Okay.
So all the big, the likes of automated decision making, digital verification services, GDPR, data protection, those big ticket items, for want of a better phrase, they aren't devolved. They're not part of the devolved LCM.
I wouldn't have known that until this afternoon, so I didn't know what was in the LCM because we didn't get it until an hour or two ago. So I'm like, it's not. That's how I don't think the committee can be held accountable for that. But in any case, okay, LCM. The department wants us to proceed. What is the situation with the LCM? Can there be an LCM at this point, in your view?
Well, this is just to make myself clear. This is the first time that I have taken forward an LCM through the department and through the assembly.
Sure.
And so I am on a rather steep learning curve here.
Fair enough.
I am not an expert on assembly procedures, so I'm not really in a position to say whether I can or can't, if that makes sense. I don't want to make an assessment of that myself.
Okay, I'm just going to ask
There's a deputy secretary on the line.
Well, and indeed, I'm sort of tempted to ask Paul. I mean, with all due respect to your hard-working staff, is that should we have been in this position? Should your staff have been in this position where we're effectively? And I don't want to. I want to be constructive about this, but it's a very unusual and frankly, slightly shambolic situation to be in. Go ahead, Paul. Could you tell us? I mean, is there an LCM? Should we be passing an LCM? Can we pass an LCM?
Well, Chair, I suppose what I would say is the royal assent at the moment isn't being confirmed The latest is that it'll be late June. Now that has already moved now a number of times. So, that's not to say that Royal Assent will be received by the end of June. So I think we can still progress with the process ahead of Royal Assent being received. I know in conversations with decent colleagues, they were very keen that at least there had been some engagement with the Northern Ireland Assembly on this, and that the LCM process had at least commenced before it approached the Royal Assent a window. So that was the purpose of, I suppose, us moving very quickly to urgent procedures to try and get this in front of the committee as quickly as possible.
Well, commencing Royal Assent is like, it's a little bit like the old line about you can't be half pregnant. Like, there's no such thing as commencing Royal Assent is not a thing, I'm afraid. Like, that, commencing legislative consent is not a thing. And I'm not sure that Royal Assent is relevant to this process, because Royal Assent is the bill finally becoming law. It's not like there's no meaningful legislative consent process if the day before you grant Royal Assent, the Assembly says, oh, by the way, that's fine by us. Like, the whole point is that we give our consent or otherwise way back in the process, and then there is the opportunity to amend the law or to do whatever. I just want to bring in others. I'm like others, I'm sort of trying to, in live time, trying to understand what's going on here, but I'll bring in Diane for South first. The Deputy Chair. You're okay. Yeah, okay. Owen Tennyson.
Thank you, Chair, and thank you, Geraldine, Paul and Colin, for that update so far. I think it's difficult to be constructive, Chair, because we're in a situation now where there will be statutory provision made which affects Northern Ireland, which the Northern Ireland Assembly has had absolutely no oversight, scrutiny or input into, and I don't think that is an acceptable position for this committee or for the Assembly to be placed in. I guess my question, first of all, is I think there was reference made to engagement that had been happening with the Whitehall Department over a number of months. We know that the department wrote to this committee on the 20th of November and made reference to a potential LCM. Has there been any engagement happening with stakeholders about this LCM?
So the engagement we've had engagement with I suppose the two other lead departments in terms of so for smart data there's been engagement with the Department for Economy, and on the National Underground Asset Register engagement with the Department for Infrastructure, both of which were content with what was being proposed within the bill. The implications are I don't want to pay the significance of the bill down, but those elements are fairly minimal. So they had no real issues with it. I should say we did have we did consult with DSO as part of this process back in December. We sought some advice around Article 2 of the Windsor Framework compliance, got some advice back from DSO that was content with that. We also did look at some of the human rights issues that the Commission had raised. Again, these were issues that were outside the devolved matters, but more for the wider implications of the bill, and we have shared that information with DCIT for them to consider as part of their legislative process.
Okay, thank you, Paul. So what I still don't understand, and what I think is pretty fundamental to this, is if the department wrote to the committee on the 20th of November, if it engaged DSO in December, and was then fit to undertake engagement with other devolved departments about the potential implications, I don't understand how we've landed ourselves in this position. We knew that this bill was progressing. We knew that legislative consent, at least a decision on that, would be required. Is there a clear explanation that the department can give as to why this has just landed with us today?
Other than just to say the pace of the bill progressing through Westminster was much quicker than anticipated, although it does seem now to have slowed, and hence the Royal Assent has now been pushed back to late June.
And can I ask, Paul, I mean, when did a submission go to the Minister to seek the Minister's view or approval of any decision on LCM?
So we had engagement with the Minister in March, and some issues then were raised, which we then sought clarification on from DCIT, and we then put an executive paper through to the executive at the 9th of May, I think was the paper, and was considered on the executive meeting on the 15th of May.
So the Minister's been aware of this since March, and the committee's finding out about it on the 28th of May?
Yes, we provided the Minister, who had some queries which needed to be resolved, and we needed to engage with DSIP to get clarification on some of those queries.
And the final question from me, Paul, what was the trigger point that exposed this and resulted in this great urgency to bring this before the committee today?
I think it was just the impending royal assent deadline, so we were trying to move as quickly as possible to ensure that we progressed as much as possible before we reached that milestone within the parliamentary process.
And who brought that impending deadline to the department's attention, if you were taken by surprise at the pace at which the bill was progressing?
I suppose it's been ongoing engagement with DSIT.
Just for the purpose of clarity, Paul, you said that the bill moved very quickly. Well, I mean, the Scottish Government so we are getting the LCM today, which is the 28th of May, for a bill basically which is going to have royal assent probably within a month. You said you were surprised by how fast it moved. The Scottish Government laid an LCM on the 22nd of November 2024. The Welsh Government laid an LCM before the Senate on the 2nd of January 2025. That's 6 months, nearly 7, and 4 months. It just seems extraordinary to me that they were able to lay LCMs months ago, and we're getting ours today.
Yeah, Chair, as I said at the outset, it's not a satisfactory position that the committee in, and we completely
bring on Paul Frew.
Accept that. I think the complication that we had in the process was that we did need to get clarification around Article 2 of the Windsor Framework, and we also had some feedback from the Northern Ireland Human Rights Commission, which again we wanted to get some clarification on before we proceeded.
I suppose we would say procedurally, there's no reason why getting that. So what was the delay getting Article 2? Was it that did the Minister say, I'm not going to sign off to this until we get Article 2 clarification, or was it an official decision to wait until this clarification around Article 2?
It was at official level that we embarked on getting clarification, and we did get a UK devolution analysis, which then we asked DSO advice around the Article 2 Windsor Framework element of it.
Okay. Okay.
I think we felt that if we didn't have answers to those sorts of questions, then the engagement with the committee, we wouldn't have been able to provide assurances that there were no implications for either of those two areas.
Okay, Paul Frew.
Thank you. I'm still somewhat puzzled in the fact that what I think we're looking at here is an absolute massive failure within the department to follow legislative process. What I'm not sure of either is how this will actually impact on Northern Ireland. So you keep talking, Paul, about the royal assent as if it's part of the legislative process. I have yet to see a bill that is actually amended at royal assent stage. Surely the royal assent stage is just basically the bill being put into law in what is technically a ceremonial rubber stamping exercise. All of the amendments, all of the work, all of the detail, all of the scrutiny of a bill is done in the various stages beforehand. And the opportunity to amend, the opportunity for Northern Ireland to give its consent is done in those processes, either the Lords or the Commons. And so even if the executive was now minded, or the department was now minded to give its consent to this bill, how do we actually functionally do that? And then if we haven't done that, does this mean that this bill, this legislation, we're disapplied? So Northern Ireland's completely out of the loop with regards to this legislative provision? And if so, how does that happen? What amendments are put down when? And what impact does that have for Northern Ireland and the public going forward?
what I would say, Paul, is the elements of the bill that relate to the devolved matters. Those three elements around the smart data and the National Underground Asset Register and the Digital Economy Act are fairly minor elements of the overall bill. And the implications for Northern Ireland are minimal in terms of those being implemented.
So imagine if they were, and you say minor, and you would have to nearly define what minor is, because this will create a differential between the nation states of the UK in that regard. So one, is the department minded to fix that anomaly? And second of all, imagine if this was major. Imagine if this was had a massive impact one way or the other, either positively or negatively, on Northern Ireland public. How were you giving your consent or otherwise when in many ways you've missed your slot? And it just seems to me that how can the public and how can a committee like this have confidence in a department that misses a slot on a legislative process? Because that's what departments do. Departments go through legislative processes. So how did we miss our slot?
Yeah, no, I absolutely accept that it's not the handling of this has not been as we intended at the outset. And at this stage, I can just apologise to the committee for the lack of opportunity to consider, even though the items within the bill are fairly minor, those devolved matter, but the committee hasn't been given sufficient time to consider those.
It's not even what the committee has looked at. It's not even the committee not being allowed to do any work on this because we've no time. The department has missed its slot. So in many respects, Westminster is blind to Northern Ireland. It can't take any consideration at all to the views of Northern Ireland. And can you tell me, do you know the practicalities around us missing our slot? So is there a mechanical, functional process that disapplies Northern Ireland from this bill? Do we know the answer to that question? The factual failure of the department that has missed its slot, do we know the impacts for Northern Ireland? Whether the provision's minor or not, what does it actually mean for Northern Ireland?
So the elements of the bill will apply to Northern Ireland, is my understanding, even without consent. However, you're right in terms of there hasn't been an opportunity then for the committee to, I suppose, scrutinise and give a view on those elements. I'm not sure, is there a mechanism thereafter to do so? I would need to clarify that.
So what I'm basically asking, what I need to know is, because of the failure of the Department of Finance, do Westminster by default apply Northern Ireland to this because they've heard nothing from the department or from Northern Ireland? Or do they now have to, by process, disapply Northern Ireland because they haven't heard from you? So is it a positive move or a negative move in that regard by the functions of Westminster? I think that's what we need to know.
My understanding is that the elements of the bill will apply to Northern Ireland.
Yeah, well, that's what we need clarity on, because ultimately this will change. This creates a vacuum, if you like, of law in Northern Ireland.
Well, it doesn't though. But either creates a vacuum of law, or the LCM process is a bit of a husk.
Yeah.
Just, Paul, you said, I just want to go back and clarify. Paul, have you any other? Are you Paul Frew? Have you finished? Have you more? Paul,
yeah, sorry,
you're finished.
Ahead, yeah.
Okay. Paul Duffy, or indeed other witnesses. You said, Paul, that there are only, I think, 3 components of the bill that affect Northern Ireland. We do have the explanatory and the explanatory memorandum of the bill, which is published, and it has Annex A, has the territorial extent and application in the UK, which
send that to members digitally now.
That is, members do have that now. That's an Annex A. It's 147 of the explanatory financial memorandum, and it has a very detailed table, which is detailed but quite easy to understand. It has provision. It lists the provision, 130 or 40 clauses, 16 I think schedules. Under Northern Ireland there are 2 columns. Extends and applies to Northern Ireland. Well, basically everything extends and applies to Northern Ireland, but obviously not all of it engages the legislative consent process. But you said 3 core elements. Well, I mean, from this, I think there's at least 20 or 30 that appear to engage. That's individual clauses. Now, they may be under thematic areas, but it's certainly more than just a couple of areas in terms of the LCM process. And that's in the explanatory and financial memorandum, which was published, I think, months ago.
So maybe I wasn't clear enough, but so the LCM process is only really looking at those 3 elements around smart data and underground asset in Section 35 of the Digital Economy Act. Colin may want to expand a little bit more on that. Colin, I'm not sure if you have a view.
Apologies while I unmute. The provisions deal with those 3 areas: the smart data, new R, and Section 35. But there are a number of clauses that will relate, that will obviously relate back to those 3 areas. But we got devolution analysis from UK government.
147.
Yeah.
We sought advice from DSO on that devolution analysis, that those were the 3 areas that were the only 3 areas that dealt with devolution matters: smart data, new R, and Section 35. And they agreed with the UK government advice. So it was on that basis that we proceeded.
When did you get that advice?
Let me see, just to check. We got that advice at the end of October 2024.
Okay. I mean, if you're getting that advice in October, and I mean, the minister was certainly engaged in this in March, and presumably at some stage the minister or his predecessor was engaged in it before. I don't understand why we as a committee weren't, given that we had it was flagged to us first in November, but we were then obviously on a watching and waiting brief. Why we just didn't hear any more about it until basically today. I want to specifically cover the fact that on the 7th of May, at the third reading, the minister specifically said, the responsible minister from the UK department said, "We regret that for procedural reasons the process with Northern Ireland has not yet reached the stage of legislative consent. We are, however, working constructively with the Department of Finance to ensure that we make progress as quickly as possible." So that was on the 7th of May. What were those procedural reasons that were holding things up that the minister articulated on the floor of the Commons?
So
I presume that was the Commons. A House of Parliament.
I'm assuming those were the advice that we had been seeking from DSO around the Windsor framework, and also the clarification around some of the feedback that we had seen from the Northern Ireland Human Rights Commission. So those issues were being clarified before we were proceeding.
Okay. Did the UK government was there any correspondence between yourselves and the UK government, either at official or ministerial level? And it sounds like someone did say to the minister at some point, "Where is this? What's happening with this?" Was there any other correspondence, I guess, between the start of this year and today, or whenever it was the 16th when the urgent procedure request went to the executive? Was there any correspondence saying what's going on here, and what was your response? Was your response, "We're just seeking clarification on this Windsor framework point," or what?
I'll ask Colin maybe to say a little bit about the correspondence and engagement with DSIT. Would have been closer to that.
Yeah, sorry, just what dates are we talking about there? Sorry again, just so I can be clear. My answer.
On the 7th of May, the minister, a UK minister, said that we regret the procedural reasons the process with Northern Ireland has not reached the stage of legislative consent. For the record, at that point, both the Scottish Parliament and the Welsh Senate had given legislative consent. Their governments had laid LCMs the previous autumn. and their parliaments had given legislative consent. By that point, we hadn't even had an LCM laid, let alone a vote in the Assembly. My question is, between the new year and mid-May, what was the UK government saying to you about where the hell's legislative consent from Northern Ireland and when is it going to happen? Did they ask you that? Did they ask that question, and what did you say in response? Either you, Colin, or Paul.
I can answer that question. That's no problem. I had weekly meetings with DSIT colleagues from the middle of October right through until now, in fact, and they were well aware of the issues that we were facing as we went along. After the DSO advice on the devolution analysis at the end of October, there was then a period where we were seeking DSO advice on the Article 2 Windsor Framework Arrangement, compliance or non-compliance with Windsor Framework Article 2. That was a rather more convoluted process than the devolution analysis, because our DSO had to pretty much liaise directly with their DSIT colleagues to access the information that would allow them to come to a conclusion on that. And it wasn't until the middle of February that they came back with a conclusion.
Sorry, this DSO, Colin, DSO didn't come back until the middle of February? Yeah.
Yes, DSO come back. So we had to go to them to get an expert opinion. During that period, then I was writing out to the different departments as well to get an understanding of if there were any policy leads, other policies. So there's DFI, for instance, with NUR, DFE with the smart data, have an interest in this, obviously. And then from March onwards, then it was really a case of there were queries around the NI, and that sort of time, make sure my terminology is correct. The Northern Ireland Human Rights Commission, they provided a briefing, and there were a number of queries around that we weren't in a position to answer. So we had to go across to our DSIT colleagues and ask them, could you address these issues on our behalf? So we used that, and then from then on, we were then into the process of trying to move this process through the Assembly or through the Executive to get to the Assembly. Our DSIT colleagues were well aware of all the problems we were having, to be honest with you, and I also sit on a group with the other two devolved nations. I sit in a group with them, and we've been meeting every 3 weeks to discuss this. So I have been, I can only apologise for not having this progressed farther on until now.
Look, Colin, I appreciate your apology, and fair play. You're fronting up here. It requires professionalism and courage to do that. I get that, and I'm not. This isn't about being assigning blame. This is really just understanding the process.
I'm just here to tell you exactly.
Good. I appreciate that. So it's our job just to find out what happened. Okay. Look, I should bring in others here who are still waiting to get in. Philip, Brett, and then Gemma.
Thank you, colleagues. Colin, if you were meeting your officials at Westminster every week, how was then the progression of this bill a surprise?
Sorry, I wasn't, just to kind of clarify this point, I wasn't meeting with Westminster colleagues every week. There was colleagues within DSIT, so the department that would have primary responsibility for bringing this legislation through. I had two contacts within their organisation, within their department, and I was meeting weekly with them.
But DSIT is a Westminster department, right?
Yes, sorry. Well, I'll take your point then. Apologies.
So were they not saying to you here, this is now gone through first reading, second reading, third reading?
Yes, there was the way I would describe it was there was a window of opportunity that we missed. Essentially, that would be how I would describe it, to have this progressed on a timely basis. And the problem was that the other departments, the other devolved administrations, the biggest issue we had was the Windsor 2 framework, was getting that through, because of the relationships and the sensitivity of the information. I was allowing DSO to come to a view on that. That pushed us back by a good couple of months, and that was really the main issue. It did progress. I can say we were never really given a definite time frame of when this would reach Royal Assent. We had a good idea when it reached Royal Assent. We had a good idea throughout the process of when we needed to get things progressed by, and unfortunately, in this instance, we missed that.
So royal assent usually is irrelevant in an LCM process because the final that would need to be done before third reading in terms of amendments being tabled. But is the position now your view that the UKG will not disapply in Northern Ireland if we can get a view by this committee / the executive in advance of final reading, which is scheduled in the House of Lords for Monday? Or what's your why are you referencing royal assent?
Well, I was using whenever I was discussing this process with my decent colleagues, that royal assent was used really as an end point.
Okay.
For want of a better phrase. So I'm not an expert in
I get
these
that.
and legal matters and taking things through the UK Parliament, House of Lords, and even the Northern Ireland Assembly. So firstly, I'm rather ignorant in some of these matters when it comes to the finer detail.
100%.
So that was our kind of reference point, for want of a better phrase, even though it's a reference point, it's rather past the post. So that's why that I keep referring to, unfortunately. That our decent colleagues were well aware all the way through that we were having these issues.
Yeah.
And I think we were always hoping that we could have pushed this in through, across the Assembly far earlier than we have.
Yeah. And then just in terms of the letter that the Finance Minister wrote to the First and Deputy First Minister dated the 16th of May, are you aware of that letter?
Yes.
Okay. So paragraph 3 says, I have received support for that position being seeking accelerated passage or agreement by the First and Deputy First Minister under urgent procedure. So at what date did Minister O'Dowd receive the approval of Minister Muir?
I can't answer that, unfortunately. That's outside my bailiwick. That sits within their office, not mine. But
I can step in just
ahead,
that
Charlie.
part. I had written to Minister Dowd to take this draft executive paper, so this is to be tabled on the 15th of May. Things changed at the Assembly and it was brought up as any other business, but I believe the executive paper was circulated and we did receive formal notification back from DERA to say that they were content. So we have that in writing. I can double check the date of that, but that's why that was included.
Okay. And then the second letter then is a reply from the First and Deputy First Minister. Unfortunately, the Executive Office don't seem to date their letters, so I'm just wondering if you know what date that letter was received from the First and Deputy First Minister given approval for the use of the urgent procedure mechanism.
It was late last week. I can again clarify the date for you. I would have it in my emails, but it was late last week.
So, Geraldine, would you...
22nd.
Last Thursday.
And then you got that on the 22nd, and then the Minister or the Department then laid that LCM in the Business Office today?
So it was I wasn't aware. I made weeks in Department of Finance, so apologies to you on my behalf. I wasn't aware that the Minister had to write officially to the Assembly to get it laid when I put the executive papers up and put up the LCM for the executive paper on 15. Yes, I assumed wrongly that started the Assembly process.
Okay.
So when I found that out, I drafted the note, but with the bank holiday, it was Tuesday morning before that went.
No problem. And then the committee's made aware through the Business Office, or?
We got that those emails this after, well, late morning.
Yeah.
Late morning from both the department and then from the Business Office. They came fairly close to each other's chair.
Okay, no, that's no problem. Listen, this is a learning curve for everyone. And just in terms of then discussions with DSIT at Westminster, so are we now going to, is the department going to talk to these guys to make sure that there's no amendments laid on Monday by the government to disapply the provisions within Northern Ireland? Because the LCM process hasn't been done?
I can certainly go back and see clarification on that. That's not a problem at all. I've got a direct line to them at the minute because this is very high on their list of priorities.
Okay. It would just be very useful for the committee to know ultimately if this isn't going to be disapplied come Monday, maybe this process is a mute one, and there's obviously wider discussions in relation to scrutiny, but some of my concern is that just Northern Ireland is excluded from this bill. But thank you very much.
Just so we're clear, what the LCM says is that the advice from the DSO, and it's consistent with what the UK government say, is that this does engage Article 2 of the Windsor Framework, because obviously it touches on rights in that sense, but that it is consistent with Article 2, meaning it is not in contradiction. Is that fair, or is there any doubt around that? Is that the department's stated position?
Yeah, that is the department's position on that. Sure.
Okay, but that's clearly the main source of delay. Gemma Dolan, Gemma is audible.
Yeah, can you hear me okay, Chair?
Yes, go ahead.
Great. Sorry, I was dropping in and out of the committee there. I had to go to an event in Enniskillen, but I understand this is a complex issue, but if it was only agreed at the executive last week, surely it couldn't have come to the committee any sooner.
Wasn't agreed at the executive.
Are you, if that's a question addressed to me, Gemma, I think we probably could have been briefed on. We could have heard about it ages ago. But in any case, I'll bring in the officials. I don't know if Paul Duffy wants to address that.
Okay.
Yeah, well, I suppose there would have been an opportunity, if we had had a window to engage with the committee. Sorry, can you hear me? Is it breaking up?
All right, folks, just pause one second. We're just going to have a slight.
Chair, if everyone else who's not speaking could mute.
Yeah, I think just everybody who isn't speaking, so that's Gemma, Jerry, Tom, Geraldine, Colin, etc. Please mute yourself. Paul, please address that specific point which Gemma Dolan raised about whether it was not possible to brief the committee until you had executive agreement. That's the point.
Well, Chair, I suppose in this instance, we found that we didn't have the opportunity, just the way the pace of things had moved, and because we didn't get approval until last Thursday. But I suppose, reflecting on where we found ourselves, there may have been an earlier opportunity to engage with the committee, even though we may not have been in a position to answer some of the questions the committee may have raised around the likes of the Windsor Framework and the Human Rights Act, and the degree that those things impacted on Northern Ireland. So, we could have engaged, but we wouldn't have been as well informed as we are now. But unfortunately, this does limit the opportunity for the committee to give consideration to the LCM.
With respect, I'm not really sure we can do any consideration beyond what we're doing here now. I'm not sure we can really call that consideration of the detail. But Gemma, did you have another point?
Yeah, sorry, Chair. Just in terms of the Windsor Framework as well, it was mentioned, obviously Scotland and Wales don't have that consideration, but I'm just wondering, does the LCM now deal with the human rights concerns around the Windsor Framework?
So the issues around the Windsor.
Again, members, this is difficult. Sorry, apologies, Paul. I need everybody to go on mute who isn't Paul Duffy, and Paul will answer the specific question from Gemma, and then I'm going to move on to Jerry Carroll. Paul, if everybody else could go on mute, and then Paul, give the answer to that question that Gemma just asked.
Yeah, sure. I suppose the issues around the Human Rights Commission had raised were concerns that we sought some advice from DCID on, but these were not matters that impacted on the three devolved areas that the bill touched upon, that the LCM was seeking consent on. So those human rights issues are wider concerns to the bill to be explored through the UK parliamentary process.
Okay. Okay, Gemma.
Yeah, thank you, Paul.
I'm going to go now to Jerry Carroll. Jerry.
Yeah, thanks. I mean, there's last minute, and then there's this, which is more like Fergie time, which I think it's really unacceptable for the committee to be asked to give its view on this LCM. And I don't think we should. I don't think we should be bounced when there's huge questions. I appreciate the officials being here, but it's very last minute, and there's questions that I haven't had the chance to prepare because we got this literally last minute. and maybe Paul or Colin, you kind of touched upon the three themes that are applicable to the north here. It's been raised with me through a union that represent and organise courier workers, so likes of for Just Eat, Delivery, and other companies like that, and they have raised with me about the main content of the bill in Westminster, that it removes protections for workers against automatic decisions being made that impact on those workers or employees, however they are described. And I've heard some mentions of human rights, and obviously there's been an implication that human rights have been given a thumbs up for this bill, but I haven't really heard any detail of that. And I would like to explore that further. And given the way this process has been presented to myself and the committee, I don't think we're able to do that. So I think it's unfair for us to be asked by the department to give in consideration, which we've been told is small fry stuff, but I think it could be bigger. And given the fact that AI is set to explode by 2027, it could be even bigger in the next 2, 3, 5, 10 years. So I'm not happy either about the process, but I think there's huge questions that haven't been addressed today, and I don't know if they're applicable to the LCM. I don't know if they're applicable to the original legislation, and that's unclear to me.
Okay. Fair enough comments there, Jerry, but more broad points. Do you need them to be addressed by the officials? Are you happy enough just to put that on the record?
Well, just if they had any specific concerns looked at, because I know I'm pretty sure the Couriers Union, the ADCU, they were making a lot of noise in England about this bill. I presumed they put a submission in the committee stage, and I can't say that for certain.
Yeah.
So
Okay.
I don't know if there's been any direct conversation with the relevant officials in Westminster, or I don't know. So I just kind of.
You want to pick up that specific point then, either one of the officials about the trade union engagement specifically on delivery, and we are having issues of our own in the background with a cherry picker or something, which has decided to provide a glorious cacophony to our committee hearing. It's added to the sense of farce and chaos. So we'll be raising that separately. Go ahead, Paul.
Do you want me to speak to that, Paul, or do you want to take that one?
If you want to go ahead, Colin, I'm coming up.
All I would really say to that is that I understand the concerns around the wider implications of the Data Use and Access Bill. However, for Northern Ireland or for North, this LCM and all my work has been in relation to the three areas that are set out within the documentation, which is smart data, the new R, and the amendment to Section 35 of the DEA. Those wider concerns are not devolved matters, so therefore they're not included within this legislative consent motion.
And just to say, Chair, we did see the briefing that was produced by the Northern Ireland Human Rights Commission, and we did ensure that was brought to DCIT's attention, because those are the issues that have wider implications for the wider bill rather than the devolved matters.
Okay. I think it's important to say that MLAs, though we are obviously have a responsibility for what's devolved, inevitably in order to get the context and to represent our constituents, we are entitled to raise issues, as Jerry has just done, that are about the broader remit of the bill. There's nothing illegitimate about that, and in a sense we can't really do our bit on understanding the devolved bits unless we understand the policy context of the rest of the bill, even the bits that particularly impact the bits that apply to the UK as a whole. So it is relevant, because if we're only getting a briefing on the bill writ large now, then it becomes because you can't really understand how the specific devolved bits interact with the rest of the legislation if you're finding out about it an hour before the committee hearing on it. So I would just fundamentally challenge this idea that you don't need to worry about all the rest of the bill that's not devolved. We need to understand how the two interact. Are you happy enough, Jerry, with that? Or not happy enough, but have you got covered stuff?
Kind of also, sure. I mean, if there's no LCM, which there may or may not be, I mean, this bill will apply because of the aspects that are going through Westminster that already apply here. So, kind of, in addition to your point, it is quite relevant, and I don't think the concerns have been addressed. So, I mean, I would like maybe the officials to come back to me to say the detail, maybe the exploration of those kind of concerns about automated decision making in particular, and how they impact on workers' rights. Because just with respect, all we're hearing about, there's three themes, and that's it. But these are cross-cutting issues, and this probably will apply to from the original bill.
Okay. I think those points well made. I think we're going to have to raise those points with the department, either through the committee or individually. Just one, I guess I'm going to try and summarise the position we are in at the minute. There is a data use and access bill which is very big and very wide-ranging. There are specific provisions, albeit we are told that they cover discrete areas in a devolved sense, but when we look at the explanatory and financial memorandum, there are dozens of clauses that are, first of all of the bill basically relates to Northern Ireland, and even of the bits that only engage the LCM devolved process, there's dozens, there are dozens of clauses. So we would need, I think, to understand, to be, as legislators, confident that we were understanding exactly the remit and extent and potential impact of those clauses. But where we are is that the department has laid an LCM, which is now formally laid, but there is no sense that that even if it's laid, voted on, agreed, or not agreed by the Assembly, that it will have any impact on the Westminster process because it's effectively too late. Is that correct, Paul Duffy?
Yes, Chair Lord, that's correct.
We're effectively, the purpose of this LCM is really to say that we've sort of done an LCM, but it doesn't really matter whether we say yay or nay. It'll have no impact on the policy one way or the other, and we don't really have an opportunity to scrutinise it. I think is a fair summary. I'm not trying to be pejorative, but I think that's a fair description of where we are.
Yeah, and Chair, I think, yeah. So if the LCM was approved, then obviously the record would show that the committee had considered the LCM. If the committee didn't endorse the LCM process, then the issue would still apply, but in a sense, UK government would have legislated without consent of the Assembly.
So so leave aside what the committee says. That you're currently hoping to have this debated on the floor of the Assembly on by when, basically.
I'm not 100% sure of the timeline.
I mean, it needs to be in the next month, I presume.
Yes, it needs to be within the next couple of weeks, but I'm not sure what that date is.
Okay. I'm slightly speechless, to be honest, at the idea that we have that we are allegedly going to debate this LCM, but we can't really say what the purpose of it will be or what happens if it passes or fails. And I think they're probably quite big questions, not just for the department, but for the Assembly in terms of process, and indeed bigger questions about devolution and how we've got to this position. At this point, I don't have any further questions. I appreciate that individuals work very hard, and I just want to acknowledge that. I don't want to put individuals, particularly people who aren't who are mid-ranking officials doing their best. I don't want people to feel that they're being unnecessarily held accountable here. So I acknowledge people are under a lot of pressure. So I just want to acknowledge that and in a way that's professional and respectful. But there are big questions here, including for the executive and understanding how all this happened. So I think what we'll do is release all of you for now. Frankly, I am slightly aghast and a bit sort of lost for words at the situation we've been placed in as a committee and an assembly, but we'll have to think through how we handle it. And thank you for your time, and thank you at least for having the wherewithal to come and front up in the committee hearing, because probably not the most fun thing you've ever had to do in your professional lives, but we will revisit this. Thank you.
Thank you. Thank you.
Thank you, Chair.
Okay, members. So we are in a situation. I feel like I would need probably a PhD in devolved constitutional law to summarise the slightly insane situation we found ourselves in. An LCM has been submitted yesterday. It has been submitted for urgent procedure to the executive. I'm not sure it's been formally agreed at the executive, but it has been submitted to be discussed. The committee has it now.
We're assuming, Chair, that the response from the executive office was agreement to the urgent procedure.
Okay. The agreement to the urgent procedure for it to be brought to the committee, then the assembly, or for it to be scheduled.
Look back on that, Chair.
Okay. What I'm going to do is summarise. I think, as chair, and honestly, with kind of respect, because I think there will be a bit of probably post-mortem about how this happened and the various policy questions. I, at this stage, don't think there's any realistic situation in which the committee will be able to give a view one way or the other on this, because there's so many questions to be thrown up. Separate question is the legitimacy of doing an LCM and the potential consequences. Okay, so the ministers have agreed to the principle of an LCM. It has received report from certain ministers to do the. Okay, my view is as chair, I wouldn't be comfortable leaving aside that, and clearly there are probably legitimate arguments as well. I wouldn't be comfortable saying the committee has done due diligence on even on the devolved aspects of this. So I think we would need to reserve our position and not take a committee position. Is my view. Are people content with that? I'm not saying you're content with it, but I don't think there's any way I would in no way be comfortable saying that the committee has done any significant work on this.
And you could quote precedent of the Windsor Framework Committee.
Okay, thanks, Steve.
Yeah, but it is quite farcical that we're going to go through a legislative process on an LCM which isn't going to go anywhere.
Well, I think this is going to be an interesting question for devolved scholars, because I don't know how we are going to pass an LCM after it sounds like, or we'll at least debate and vote on an LCM. We will either debate and vote on an LCM, which will have could have no practical effect because it'll be too late in the UK legislative process to affect it, or it'll just pass without us having even given a view one way or the other, and it'll simply apply. I think there's a big questions there in terms of process, but perhaps not for this committee at this stage.
We're at a disadvantage because we don't actually know the process in Westminster with regards to this happening. So it's just farcical. And I'm feeling uncomfortable because we have had a situation here where one official has fronted up.
Yeah.
But to me, that's not the issue. The issue is, how did it happen? How was it on one person's shoulders? And how did the department...
And I just want to say... we have to be robust and ask tough questions. There were mid-ranking officials who are in front of us there who I assume will have not been doing this in a vacuum. It's not fair for them to be shouldering all of the responsibility for this. Owen Tennyson.
It was just to say, Chair, I completely agree with that point, because the officials were very clear that they briefed the Minister in March. And ultimately the Minister is the person that we're holding accountable in this committee.
Yes,
so there are questions about, well, what questions did the Minister ask? What engagement did the Minister have? To what extent was the Minister aware? And I don't think we have any clarity on the basis of that session on the role that the Minister actually did or did not play in all of this, and I think it's something that we need to explore further.
Yeah, I think that's fair enough, and I think the one action we need to get coming from this is to write to the Minister, and specifically the Minister, and ask for a full accounting of the process that happened between last autumn and now, and also a clear steer on what the actual legal position is, we might be in the position of passing Schrodinger's LCM. The LCM process is already a slightly kind of slightly strange conceptual thing anyway. We're making it even more weird and conceptual by doing it after there's no potential consequence to not passing it, but we're going to debate it anyway. Steve Aiken.
Yeah, Chair. I hear all that said about the junior officials. I would quite like the Permanent Secretary to come and explain to our committee why this happened. Sending sort of mid-level of officials into the firing line for something that is actually quite worrying. I think I would quite like the Perm Secretary to come and explain to us what happened.
Yeah, we'll bring in Philip Brett and we'll have a discussion about future. We will definitely be taking evidence on this process. We wouldn't be doing our jobs if we didn't understand how this happened. And I think the Permanent Secretary probably is the right person in the first instance. Philip Brett.
Thank you, Chair. Just two questions. So, the official position / report of the committee will be we were unable to take a position, and then that will be laid in the business office, and then 5 days.
The committee reserves its position, saying either yes or no,
yes,
and because it hasn't had sufficient information.
Can we not then emphasise the fact that we're completely dissatisfied by the process?
I think that's in the rationale for reserving the committee.
I think that's the rationale, and there will be an opportunity to articulate that, obviously, in the course of the debate.
As well.
And then,
and I think this is going to throw up really significant questions about, executive procedures, but also the LCMs and how they're dealt with.
So I just had a second point.
Yes, go ahead.
Just whatever we're requesting information, I'd just be keen to see the devolution assessment that carried out and was referenced a number of occasions by officials. I know that they have then said that there was only those 3 issues that were relevant, but I would quite like to see that, just so that we can come to our own judgment that those are the only 3 issues.
Yes, I think that's totally legitimate. Deirdre?
I suppose this just highlights the whole LCM process and reserved matters, and it's not just unique to this committee, it's in other committees as well, where there is that frustration that you're being asked, even if it's very narrow in scope, your main concerns may be with the broader bill that we have no say or control over as a devolved assembly. So that is the frustrating bit. And I suppose, I'm assuming that some of the concerns that maybe the Minister would have had are the same concerns that we would have, maybe around the Article 2 and the Windsor Framework, and also the human rights concerns as well. And obviously, it has been highlighted, and I think even Jerry's points, it obviously is with the reserved issues in terms of the broader implications of the bill. And that wouldn't be unique, as I say, to this LCM either. Obviously the timing isn't perfect, but I suppose it is narrow in scope, and you would want to see if, I suppose, the concerns of the Human Rights Commission and others, have they been allayed then, through the engagements and through the work that even the British government have done directly on the LCM areas, that we have responsibility and oversight for. Notwithstanding, we can still disagree with the bill more broadly. So I'm just assuming, I don't know because it doesn't say it in the papers that we've got, obviously, but just from reading it, in terms of some of the consultations and engagements, it alludes that obviously the department did have the same concerns, and I suppose we're waiting on clarity around some of those aspects. But
I think given that the LCM is the department and the Minister recommending that the Assembly, that is by definition recommending that the Assembly give legislative consent, we can ask the Minister to explain why he and the department gave that view, because presumably they will have been satisfied that those issues were addressed. So I think we can ask that. That's fair enough. Okay.
Could we get a raised paper on the actual LCM process, and where within the Westminster process, legislative process, whether it be in the House of Commons, House of Lords, where you actually insert your LCM?
So I would just say this on the LCM. I would imagine, rather than trying to there will definitely have been umpteen papers done on the LCM. I'd imagine Ray's will have done multiple papers probably on the LCM. It may be that we dig that out, and if it's, rather than making a new request of LCM, if it's a high-level briefing, so we can, that might be useful for. I do think we need to, ideally before the summer recess, have an evidence session on how all of this happened. That we might touch on some of the issues to do with the substance of the LCM and the Data Use and Access Bill, but more likely we'll talk about process, and that will be part of it. Should be part of our pack for that.
Chair, my recollection is procedures did.
Yeah, they probably
looked at LCM, so we may also try and get our hands on that.
Well, I remember seeing research papers on what a negative resolution is, what a positive resolution is, but that's more the process within here. But it's how we actually interact through the LCM process with Westminster.
Yes, indeed. But what I don't want for us is if we have a briefing from, for example, the Permanent Secretary in the next few weeks, which I would like, I don't want us to be in a situation where we are distracted from understanding how this specific instance happened and the specific instance concerns with a broader discussion about the flaws in the devolution model and how LCM processes could be. There definitely are learnings that we will want to understand, but we need to understand exactly what went wrong in this specific process, because this is a totally shambolic situation for a committee to be faced with. And I would just make the general point that it discredits us as an assembly whenever we don't take our job of scrutiny seriously, and whenever departments, either by omission or commission, act like this place is a weird little toy town parliament, doesn't really do scrutiny, and scrutiny doesn't really matter, and should we just go in and debate pointless motions in the assembly chamber, and we're not really legislators. That, unfortunately, we reinforce that a lot, and I think this fiasco will probably underline that. But anyway, that's a point I've made. I think we're going to move on at this point. We have actions there. We're going to go back to the department to get clarity. I think we are going to seek an oral briefing on how this happened. Our position is going to have to be reserved, presuming members are content with that. And we are going to have, I think, an oral evidence session on how this happened inside the department, ideally with the PermSec. People are content. We will proceed on that basis. I think we've agreed everything that needs to be agreed on that. Okay, grand. Now, we've done everything else, I think, which is
Chair,
unusual.
yes, we can go to 12.
We can just go to 12, which is the date, time and place.
No, AOB.
Oh, AOB. Does anybody else have any other business they wish to raise? Grand. Okay. And it's only 5:05. We've got a lot done. Agenda item 13 is the date, time and place of the next meeting. The next meeting is Wednesday, 4th of June 2025 at 2 p.m. back in the Senate chamber, hopefully without a backdrop.
Chair, just to remind members, we have that additional little informal meeting with Hospitality Ulster at 1:30. That will either be in here or in the Senate. We may end up just doing it in the Senate. It might just be easier.
It matters not, sir.
So that we don't have to move.
It's a shame that the noise has stopped now.
You still notice?
Okay, so we're just going to I'm going to put the question. The committee do now adjourned. The committee is now adjourned. Thank you, Heather.
Committee Room 21. Sound. 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 Committee Room 21. Signed. 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 Committee Room 21. Sound. 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 Committee Room 21. Sound.